Good morning, everybody. Happy Monday. Whew. We made it through the weekend, didn't we? Nice job, everybody. Snorri, Alex, Chef, PFI. Nice to see you guys. Gary taking that rock star of a trend trade. Love seeing that. How was everybody's weekend? Did you guys relax a little bit? Take care of yourself? Stretch your legs? It's only your trigger lines, D-Rock, or is it everything? Only your trigger lines. So do this. I want you to right click and I want you to go to the very bottom and go to templates. And off of templates, I want you to hit load. And then if it's your 13.2 chart, get that 13.2 Renko on there. If it's your 5.1, get your 5.1 Renko on there. But let's try reloading the templates before you do anything else. Cool? And then, of course, D-Rock, I always have to say this because I am not the techiest tech guy that ever did tech. Jason over in tech support, and of course Monday morning he's got a little bit of a lineup. Reversal bar happens all day long, PFI. Oh, you just see Renko, so you don't see any at all. It's not just the triggers, it's fibs and all that. All right, guys, so try this. Let's go through a couple things. We're going to have a little tech class this morning. I like it. First and foremost, guys, did you go through and do let me get my and crude oil did roll, guys. We're in November now. So guys, when you woke up this morning, did you go through the rigmarole of getting rid of um, cash, tick, all that stuff? NinjaTrader 8 best practices. You guys went through and did this, right? I'm going to show you a couple little tricks. You did not? So guys, this is a daily thing for you because what happens is your data is digital, right? And if your data is digital, digital's got the potential for corruption every now and then. I do too, PFI. I do it at the end of the day when I log off, or right before I go to bed and I'm shutting down for the day. Sometimes I'll do it. But guys, what you want to do is every morning. So do this, guys. Close your NinjaTrader 8 if you're having troubles right now. And this may not fix it, but this is a part of the day, guys. You have to go Documents in NinjaTrader 8, and you've got to get rid of that cache and tick. Get fresh data in there so that there's nothing corrupt. And then you're going to go through to your temporary folder, and you're going to get rid of all these temporary files in here. And then you're going to go through to your workspaces, and you're going to get rid of the recovery workspace. And guys, this has to be a part of your day every day. This is one of those little safeguards to get you where you want to be. Not necessarily. Don't start over. But guys, one thing that you can do is right click, go to data series, change your days to load from 10 to 9 or from 10 to 11 and see if that fixes it. Because sometimes there's just a tick that's wrong. And that helps sometimes. So what we're doing right now is we're learning how to troubleshoot our NinjaTrader. Because if you wake up at 3 in the morning and you're ready to trade, this is a great way to help you out with that. But this is daily maintenance, guys. This is daily maintenance, going through that NinjaTrader, how to set it up, making sure everything is good. Another thing that can be helpful. So D-Rock, open up Documents, NinjaTrader 8. You're going to delete cache and tick. You're going to highlight them and just click delete. Make them go away. That's going to give you fresh data. Cool. So here, I'll tell you what. I'll do it with you because my NinjaTrader's not up. So I'm going to go NinjaTrader 8. I'm going to go DB. So it's in the DB folder. I'm going to highlight cache and tick. Once I highlight those, let's bin them. Gone. And then I'm going to go back to NinjaTrader 8, and I'm going to go temporary. And I'm going to click on the top one. I'm going to hold down the shift button and go to the bottom one. And that's going to highlight everything in my temporary folder. And I'm going to delete it. Gone. And then I'm going to go back to NinjaTrader 8 and I'm going to go to Workspaces. And I'm going to click on Recovery. And I'm going to delete it. Gone. I saw your question, PFI. I'm working on something else right now. Good morning, Luciano. Your temp folder. Okay, then no worries. Then there's nothing to do in there. Actually, except get rid of the startup one, right? Dwight, NinjaTrader 8, DB, get rid of cache, get rid of tick. Cache and tick, cache and tick. And then there's all those temporary files. And there's your path up top, guys. This is just daily maintenance. This is stretching it, getting it happy and ready to go. Um, so guys, you can give that a try and see if that helps. The next thing I do, that's daily, right? So if I come in and I still have those gray screens and there's not the tick data, I will, no. So Dwight, what you're probably doing is you're under NinjaTrader 8 and you see cache, right? But there's no tick. But if you looked at the picture and listened a couple of times, you have to go to the DB folder, and cache and tick reside in the database folder. This is why we all have grills with extra parts when we put them together. So it's in the database folder. And if you look at the pictures that I posted, guys, there's your path. Documents, NinjaTrader 8 database, and then it's within the database folder that we're looking. And on those temporary files, NinjaTrader 8, temp, these are the ones that we're getting rid of. And then guys, disconnect. When you open back up, you can repair and reset your database as well. Good morning, Sydney. These are all little tricks that I do on my own. And guys, I'm not a tech guy, not even a little bit, but these are the things that kind of get me back in line sometimes. And then there's one more thing to do that you can do. And that is, if your charts are up and they're all gray, guys, sometimes it's like one little tick somewhere around midnight. You can right click on the chart and go to your data series. And under days to load, if it says 10, change it to 9. Or change it to 11. Trick it into thinking that that one little glitch isn't there. And a lot of times that's helpful. And then, of course, if you're still having challenges, get with Jason and Tech. There's nothing that he can't fix. But guys, those are kind of the usuals. And the database, tick, cache, that's just good morning. Like that should be part of your routine every morning. Go through that NinjaTrader best practices every morning. Good morning, Jose. Guys, every morning go through NinjaTrader 8 best practices. Give yourself the best chance of having no ninja troubles. And then, of course, the next part of your routine is going to the news and making sure that there's nothing going on, nothing that's going to make that market bump, jump, slice, go nuts. So this morning, Monday, September 18th, guys, we've got a little housing market index at 10 a.m., but it's low impact. It's probably not going to be a market mover, but it has the potential to, right? So if it has the potential to, do you want to trade in front of news? That's a decision that you have to make for yourself. And D-Rock, Dwight, keep me updated. Let me know how it's going. Don't just get frustrated and say, Dag nabbit. Let me know if you get to where you need to be. It worked. Awesome. That's what I was hoping to hear. And the cool thing is now you know what to do if you wake up. Guys, true story. Not a tech guy. When I have anything that I can't fix, I go to Jason as well. But because Jason's been so helpful over the last couple of years, I have learned a few tips and tricks from him that I'm always willing to pass on to you guys. So guys, not a lot going on with news. Here's your link to forexfactory.com. The same way you need to set up NinjaTrader 8, guys, check your news each and every morning. Make sure that you're not jumping into stuff that's all kooky crazy. Um, and then let's talk about the same thing that we talk about every day. What do you say? Snorri, you said you studied this weekend, right? I like that. Ron. I love studying, guys. What do you say this morning? We talk about a high probability trend trade. How about if this morning we talk about a trade where every indicator on every chart agrees for the trade? Um, Guys, a high probability trend trade is a trade that typically wins 70 to 80% of the time. And I'm screaming this from the mountaintops right now. Because I watch you guys, right? I watch you in here, I watch you in the other room, and I know that a lot of you guys, you like all the trades, right? And that's cool. Once you learn to read your charts, catch all the trades, guys. But if you're not comfortable yet, if you're not consistent yet, if you're not making money every day yet, it may behoove you to keep it simple until you are, and then expand your plan, right? Guys, there are billions of dollars to be made in the market. You don't have to make them all in the first week. Learn how to make it consistently. So you're going to have a high probability trend trade. This is our first hour. We're going to talk about the rules, and this trade is nothing more than three advantages. It's the advantage of momentum, a clear path, and an entry area, guys. And these three advantages come to be. Let me put that one in the room. I share a lot of pictures, new guys. Steal these pictures. These three advantages take place on only two charts. And I know that seems crazy, but Mark, so-and-so has 5 charts, and so-and-so has 4 charts. And so-and-so looks like they could launch a space shuttle from their desktop. Guys, keep it simple in the beginning. Let's keep it focused. 2 charts. Your large chart, and I really don't care what kind of trade you're taking, your large chart is going to define direction, momentum, and areas. And that's exactly its job, is to be this broad stroke of a brush to give you the general consensus of what the people who move the markets want the market to do. Um, it's the overall opinion of the market. Your first two rules for a high probability trend trade happen on this large chart. And when they're true and when they're met, you're going to have the advantage of momentum. You're going to have the advantage of a clear path, guys. You will have 2/3 of the equation solved for entering a trade as a brand new user. Um, why is that hard to believe? I guess it's if you were a stock trader in your past life and you feel like you have to sit on your hands for a month to make $20, I could see how that's difficult. Gosh, I love it because we make money both directions, right? If the trend is up, we make money going up, and if the trend is down, we make money going down. Make a little, lose a little, make a little, lose less, right? And just keep repeating the process. It's just like a 401k, except we're in control of our destiny. Guys, once those rules are met on the large chart, once you have momentum and once you have a clear path, we're going to use a smaller chart to refine that broad stroke of a brush. Guys, you're going to be able to pinpoint the best of the best entry. Good morning, Debbie. To get you into the market where it's most likely to continue, guys. So one of the things that I talk about a lot is simplicity. One of the things that I talk about is just not overthinking it, right? Don't take the rules provided. Don't take these three simple rules and start adding colors and start adding conditions and start adding what your brain thinks needs to be there because it's just too simple. Let it be simple. And guys, this high probability trend trade, let me go back to our education page and open up that tutorial section. The high probability trend trade is going to teach you to read your charts, and that's really the main goal of it. My goal is not to chain an anchor to your ankle and tell you that this is the only trade you can ever take, and if you take anything beyond it, then shame on you. Guys, this is the trade that builds the foundation. This is the trade that wins more than it loses. This is the trade that makes you a chart reader. And when you're a chart reader, and a lot of you guys that have only been with me for a couple of weeks are beginning to realize this. When you can start to read your charts, it begins to open doors and you start to see a lot more. Because chart reading is 90% of what we do every day. And chart reading is going to allow you to look at your two charts and very fluently understand where the market is likely to continue and then use that point for an entry. It's going to allow you to understand where the market is likely to go, and this is going to let you take profits at appropriate spots. And then you're finally going to understand where the market is likely to stop. And not only is this a great place to take profits, but guys, likely to stop is what we call termination conditions. Termination conditions are the fibs, right? That's these beautiful blue fibs, these yellow one-to-ones. But these termination conditions are where these deep pockets investors, these guys that move the market and ladies, um, this is where they're having a reaction. Whether it is adding contracts, whether it is taking profits, whether it is going the other direction, Next-gen users, you have the ability to see these likely to stop areas before the market ever gets to them and stay out of the way of those deep pockets investors as they have a reaction to the area. So where the market is likely to stop not only keeps you safe from trading into what we call termination conditions, but it's also going to behave as the anchor for the highest probability trend trade that you can take, the trade that typically wins 70 to 80% of the time. And guys, notice that there's an entire section dedicated to your first 30 days. First 30 days, guys, that's a drop in the bucket. But if you focus on your entries for the highest probability trend trade, you're going to walk away after 30 days a chart reader. And your chart reading is going to take you to really any trade that you want to get into. But if you're uncomfortable with the concepts of the high probability trend trade, if you're uncomfortable recognizing these rules in a moment, then you're setting yourself up for failure if you begin to if you begin to look for other trades that rely on these key ideas. So we're going to keep it simple today. We're going to keep it focused, and I'm going to remind you guys once again, like I do every day, the path to get to where you want to be. And it starts with posting pictures in class. Posting pictures every time you take a trade. Posting pictures every time you see something and have a question. Um, and guys, I'm not only gonna PFI, you're like, dude, what the hell? We were gonna talk about reversal bar markers. I'm not sure, PFI, but I think there may be something on here about reversal bar markers in the instructions. I've never had to add them. They should be a part of the template. But you're changing a lot of stuff, so I'm not sure where they've been. You may need to get with Jason then. That's going to be a little more techy than I'm adding and subtracting indicators. Yeah, sorry. That's just going to go beyond my scope of expertise, and I don't want to mess up your charts trying to tell you to do it the wrong way. Guys, let's talk about how to annotate your charts. This is key to getting feedback. This is the first step in becoming comfortable and confident ASAP, is simply telling me what you're doing, letting me see what you're doing, writing your rules with arrows to them being met. And guys, that means don't write your rules. Watch, I'm going to take a picture of my picture. If you're taking a trade right here, but you're writing your rules on top of it, guys, I can't see your rules being met, right? If this is your entry right here and you're writing, this is my entry, and I can't see it, guys, it becomes difficult for me to give you feedback. So if you take these rules and you write arrows to the rules being moved, go ahead and type off in the distance, right? Type in that big open area. It's going to help me see. And guys, the most important thing that you can do for me, show me where you get into the market. Do something to clearly identify where your entry is. Um, because I'm not going to lie, there's a lot of you guys that like to post charts, and you're like, Everything's set up, so I went up, right? Um, how do you remove the old entry closed data on the chart? You have to reset your simulator, Dwight. You have to reset the simulator and then show reversals true, show all reversals false, show reversal price true, and then pick your color. Thanks, Ron. Guys, tell me why you're doing what you're doing. Draw your pictures. The next thing is I need you to show me your timestamps. I want to see both of those charts. Show me where, appreciate it. Show me where, price-wise and time-wise, your entries are so that I can line up the circles of your entry and we can make sure that you're getting the best entries and give you feedback on everything that you see so that if it does need a little help, I know exactly how to help you. And then finally, guys, on your entry charts, please, 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 right-click on your entry chart and go to Data Series and scroll all the way to the bottom. See where it says Plot Executions? Here it says Do Not Plot. And what that means is that I won't be able to see where I got in or where I got out unless I go to Text and Marker. And guys, go to Text and Marker, please. And what that does is every time you enter the market, check it out. If I go long or short or whatever I do, it's going to give me where I got in, where I got out. It's going to show me with a mark on the right side of the bar or the left side of the bar where I entered and on the right side of the bar where I got out. So guys, when you give me this information in the room, when you make it so that I can see your entries, what I can do is I can help you, and I can help you a lot get to better entries, get to lower risk, and it helps me help you. So please embrace the rules for annotating in the chart. Give me the opportunity to give you the best. And then we saw this a little earlier today, and I want to add this. Guys, tell me why you exited. If you're working on a management plan, tell me why you exited. Tell me what scared you out of a trade. Tell me what fib got you out of the trade. Tell me what condition made you exit. And what you're going to do is you're going to find that just through that little bit of annotation, you will be building a management plan. And that's really the second half of everything. So post your trades in class, guys. I want to see everything. All your questions, give them to me in chart form. Take a picture of your chart, write your question. Hey, Mark, is this divergence? Hey, Mark, is this one of those pivot stop outs? Hey, Mark, is this let me see it and I'll give you the best information. And then use that spreadsheet, guys. Nexgen gave you the spreadsheet when you downloaded it. It was in your Nexgen study picks. This spreadsheet is your trade journal, guys. This is everything that you do in the market. Every time you pull the trigger with a rules-based trade, you're going to record it. So you're going to be able to track your performance every day. But the key to this spreadsheet is study the previous day's trades. What worked? What didn't work? PFI, if you post that same question in Traders Chat, somebody with 10 years experience is probably going to help you out, or Snorri's going to come in and get you right there. Thanks, Snorri. Ask yourself, what worked? Did anyone do that this morning? Did you look at what you did Friday? Did you look at your trades from Friday and say, what worked, right? What was easy? What made me comfortable? What made me confident? What had me relaxed? And then what didn't work? What made me nervous, right? Trading in determination conditions. A lot of you did that on Friday and it didn't work. Did you go back and look at it today? Because that little study every morning is going to prepare you for the day. It will accelerate the learning. So D-Rock, hopefully, that beautiful long trade that you took on Friday, I hope you looked at it this morning. And I hope you said, gosh, this was effortless. I'm going to do it again today, right? So, guys, this is your path. Post pictures. Use the spreadsheet. D-Rock, you have to, if you want to look at two workspaces at the same time, you have to build one workspace with two markets. Or D-Rock, what I think is even easier and less distracting is focus your attention on one, and then if you need to go to the other, hit Shift F3. and it'll toggle through instantaneously. But this way, you're at least giving your undivided attention to the market that you're trading rather than trying to do everything. Oh, what's crude doing? What's the S&P doing? What's the NASDAQ doing? Let me look at three markets at once and hope I don't get confused. So Shift F3 is your quick toggle, and that'll help out a lot. No worries, man. That's what the class is for, right? So guys, post your trades in class. Use that spreadsheet. Um, we're going to learn the trigger line of Fibonacci rules for when it's okay to trade. And guys, I'm going to keep it simple. I'm not going to make anything more difficult than it needs to be. My brain doesn't work that way. I'm a right brain thinker very much. My left brain went to sleep 35 years ago. So it's going to be simple. It's going to be focused. It's going to be based on advantages, and we're going to learn the rules for when it's okay to trade. What I need you guys to do is simulate your trades. Whether you're on day 1 or day 100, if you're not making money consistently and following your plan consistently, take advantage of having a simulator. Take advantage of not risking your capital on trades. Use that monopoly money, and then keep posting your pictures in class until you're sure you have the correct rules. Guys, your rules don't have to be high probability trend trade rules. Your rules can be whatever you want them to be, but write your rules on the chart so that I can help you develop the plan that you're creating. And then we're going to simplify today, guys. We're going to keep it focused on the high probability trend trade for the first hour. We're going to look at advantages. We're going to look at entries. And this is going to build that foundation that you're going to grow from. And then we're going to talk about a medium probability trade after the high probability. In a medium probability trade, all the indicators do not agree on every chart. A medium probability trade is when most of your indicators agree for a trade, but a small issue exists. All right, pay attention to this part. Your ability to read a chart is going to allow you to identify these issues. And if you're not comfortable with chart reading, it's going to become difficult to identify the issues, turning a trade into a medium probability trade. When you're identifying issues, you'll use your chart reading in these three simple advantages. And that's what's going to let you know whether you're looking at a high probability or a medium probability scenario. A medium probability trade has to be managed assertively. And once again, your ability to read a chart is going to allow you to manage these trades assertively. One of the things that absolutely awestrikes me about my brother is his ability to manage trades, his ability to take 1,000 different scenarios that are happening in one moment and turn them into a solid management plan. Guys, it takes a while to get to that point. You're going to be able to identify trouble with your chart reading, and you're going to be able to take a portion of the position off at the trouble spot, reduced to a zero loss level. And that's the goal, guys. High probability trend trade. Keep it simple. Keep it focused. Let's get to work. You guys ready? Let's do it. Here we go. 3 rules that create a trade, guys. 3 advantages that create a trade. Your first rule says that you must have strong trigger lines on your large chart. Your large chart must have strong trigger lines. Your large chart will be incapable of having strong triggers if you're fighting the trend. So let's identify trend real quick. If the background is green on your large chart, you're in an uptrend. If the background is red on your large chart, you're in a downtrend. How easy was that? Green means up, red means down. Look for rules to be met with the direction of the trade, guys. This is going to keep you out of about 50% of the losers that new users take. This is your S&P, guys. Is that trend up or is it down? What do you think? If you're brand new in here, help me out. Let me know that you're listening. Let me know that you're focused on your success. Uptrend or downtrend on the S&P, guys? Up. Chef says up. Is Chef crazy? Oh, Dwight seconds it. Now they're in cahoots. PFI says up. D-Rock says up. Guys, so easy, isn't it? Up or down on crude oil? I know it's redundant. I ask these questions, guys, but if you really get into the habit of looking at your chart and making a decision based on that color, it's going to keep you on the right side of things, and it's going to do it so often. So focus on the trend, guys. Focus on trading with the trend. Remember that trend is established by the people that control the market. Those same people, those people with billions in their accounts, guys, they're going to create the momentum in the market as well. Rule number one has you identifying that momentum. And rule number one says strong triggers. In an uptrend, your small triggers should be above the large triggers. Small triggers are these solid lines, guys. It takes two lines to create a small trigger. It takes two lines, dashed lines, to create a large trigger. These are not independent of one another. They just happen to be running parallel. And both should be wide and angled in the direction of the trend in order to have strong triggers. And there should be space between the small and large. And I want you to picture scissors opening to cut. If your scissors are closed, you can't cut, right? You've got to open them to get the job done. Strong triggers are the same way. Once those scissors open and that separation is created, you have strong triggers. The odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum is a very key phrase that you're going to hear in class all the time. You're going to see it annotated on charts, OFM. That's how I want you to annotate it. In a downtrend, the only way to have odds favorable momentum is if the small triggers are below the large, if the large are wide, both are angled in the direction of the trend. Guys, these strong trigger lines mean that the odds are favorable for the market to continue down. And when you have strong trigger lines, it's the most advantageous favorable look in a long trend to buy Fibonacci support on a smaller, faster chart to continue with that trend, or on a in a downtrend to sell Fibonacci resistance and continue down with that trend, guys. And these tails on a large chart on a 13.2 are really 15 to 30 bars on that smaller, faster refinement chart. And these are going to be where you're going to pinpoint where the market is most likely to continue and enter that trade with the advantage of momentum. If you commit to this odds favorable momentum, guys, it's going to keep you safe and it really will cover a lot of mistakes. It doesn't guarantee 100% winners, but it certainly increases the likelihood. And then when those small triggers return to the large triggers, when your scissors close, and those small triggers work their way inside of the large triggers, guys, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. And you're going to hear that in class a lot. Did you have those anything can happen triggers robbing you of the advantage of momentum? Guys, you're going to see anything can happen triggers quite a bit when the trend is ending, when the market begins to approach key areas. And you're going to be able to understand that odds favorable momentum isn't something that happens every second of the day. 90% of what we do is waiting for the advantage of momentum. And if we start on the left, the momentum is strong, the market pushes down, we end up with anything can happen triggers. And guys, this is without the benefit of Fibonacci. Look how the market reverses from those weak triggers. They become strong again. There's one of those tails, one of those potential entries for a high probability trend trade, all the way up until they become weak again, and that precedes the reversal once again. Then there is that strong triggers, there's a tail, and then we get into indecision. And we saw a lot of this last week. Hopefully you guys stayed out of it. We saw a lot of instances on the S&P, on the NASDAQ, even in crude oil, where the small and large didn't agree, maybe with each other or maybe with the background. Guys, when this is happening, your buyers and sellers are fighting. They're duking it out. It is just full-blown bench-clearing brawl. And one of them is going to have supremacy. One of those guys is going to win out. But when your trigger lines don't agree with each other, or your trigger lines don't agree with the trend, guys, sit on your hands. You've lost that advantage of momentum. This is where new users like to predict. They get tired of waiting, and they find themselves saying, oh, the market is red, the background is red, I better go short, even though the triggers don't agree. Well, now it's green, I better go long, even though the triggers don't agree. And what you find is that if you simply avoid this and wait for one of them to win, for one of them to establish that momentum once again, the advantages become overwhelming because strong triggers fix mistakes, guys, and strong triggers break areas. Strong triggers are really the precursor to everything that you do. So is everybody cool? We're going to use the most current bar. The trend is up, right? And the small triggers are above the large triggers. Not only is my trend up, but my momentum is screaming. And look how that market is flying to the upside. Guys, that is live in the moment, and it's that easy and that quick to recognize that odds favorable momentum. Small's above the large are wide. They're angled. Give me a Y if you see it, guys. There's that odds favorable momentum. And sure enough, we're watching that market push up. It really can be this easy. Smalls are below the large, and the large are angled down, guys. That's a pretty good momentum look. And you're going to be able to recognize it. Large chart, most current bar defines the trend, defines the momentum, and then we're going to use it to define the areas to make sure that we have a clear path. Um, so when the momentum is present, we've established the trend, we have those strong triggers, we have to make sure that there's nothing in the way, that there's nothing to create a bounce or a spike, nothing that's going to create a reaction. And that's what we call those termination conditions, those areas likely to stop the market. And I'm going to go right back to the rules. And I'm going to go right here and we're going to talk about the recipe for a termination condition, guys. It's not difficult. There's only two things that have to happen. And the first thing that has to happen is that price reaches the area. When I reference price in this classroom, I'm going to take a picture of my picture. We're going to use it for the visual here. When I reference price in the classroom, I mean these price bars, these dynamic Renko bars. And that's all the bars on your chart are, guys. They're a reflection of price. Where's the market trading? The bars reflect that. So when price, those Renko bars, work their way down to support and they reach support, that's the first part of the equation. Price reaches support, price reaches resistance, price reaches an area. And when price reaches an area, all you have to do is ask yourself, where are my trigger lines? In this case, price reaches Fibonacci support. And when it does, all of the trigger lines remain above support. No more short trades. That's it. This area may bounce the market up, this area may break, or this area may create just crazy indecision as those deep pockets investors react to it. So when price reaches an area and none of your trigger lines break through, rule number 2 isn't met. You've reached a termination condition. Your advantage of a clear path, and I want you to think in advantages. Your advantage of a clear path has gone away. It's not present. No longer looking for a trade. When is the path clear? Pretty simple. Here's Fibonacci support right up at the top, right? And initially, small and larger above it, price reached it, termination. We have to wait to see what's going to happen. Well, if both your small triggers and your large triggers get through a Fibonacci area, get through one of these key areas, well, then the area is broken and now your path is clear. Now you have room to get to where the market is likely to go. So smalls and large through, the path is clear. No triggers, the path isn't. No trade. And then strong trigger lines break things, guys, and you're going to see this a lot. You're going to see where the small triggers break through the area, but the large triggers remain above. Remember I said that you're going to work your way into a medium probability trade, guys. This is what we here at Nexgen call a 50-50 trade. It's not a reflection of your odds of success. Good morning, Bobby. It means that 50% of your triggers have remained above the area and 50% of your triggers have gotten below. Guys, this is an area, let me do this real quick. I'm going to type it out for you. A 50-50 means that the area has the potential to break but has not broken, which means it's not a clear path. It can't be high probability trend trade. Rule 2 not met. So guys, strong triggers break things. The advantage of momentum can smash through Fibonacci areas all day long, right? But until both the small and the large get to the other side of that area, it's still not a clear path. And you're going to take a lot of trades, I think, that are these 50-50 trades, and we'll talk about how to take them efficiently. But if the area hasn't broken, the path isn't clear. And if the path isn't clear, it's impossible for it to be high probability trend trade. So let me give you the one that shows all three scenarios right in one picture. No triggers through. The area is not broken. It's not a clear path. Rule number 2 is not met, guys. Is everybody comfortable with that? Smalls and large break through. The area is broken and the path is clear. There's one of those tails with that odds favorable momentum. And then finally, when the smalls break through but the large don't. And guys, odds favorable momentum is a 100% requirement for this. This is an area with the potential to break, but since it hasn't broken, we're going to say not a clear path. Is everybody comfortable with that, guys? It's a pretty basic concept. It takes just a little bit of looking. Price reached resistance. All the trigger lines are below. You guys know not to take a long trade. Price reached resistance, darn near to the tick. Guys, look at the reaction off of that red Fibonacci resistance. This is why we don't take trades into fibs with triggers below. Look at the market screaming down. Now it has odds favorable momentum. It went from no triggers to small triggers, and now the large are trying to break through. And there's that 50-50 to the upside. The smalls are through, but the large are not. But you see the odds favorable momentum. You can see the potential for the area to break. Guys, this is all we're going to do with termination conditions. We're just going to simply either have a clear path or we won't. Oh, you know what I didn't do? Let's talk about the areas that can behave as termination conditions. The recipe doesn't change. But what are the areas, guys? We are going to look at divergence, high and low lines. What is divergence? I saw a chart posted. In order to have divergence, in order for divergence to be true, this magenta line has to print from a pivot at a high. This cyan line has to print from a pivot at a low. Guys, divergence is nothing more, I'm typing it out for you, than a loss of momentum. That's it. It means that momentum doesn't follow price. It means that when I have divergence, price reached 79.46 and the momentum didn't follow. That's it. It's showing a potential slowdown in the market. It's not a termination condition. When these print, price has to reach it for it to become a termination. We're also looking at red Fibonacci resistance, blue Fibonacci support, and yellow one-to-ones. These are the areas that may stop the market. These are lines where those big time traders are probably going to react. I don't say definitely, I say probably, because they may or may not. So the price comes down, the triggers get through support, guys. This is not a termination condition because the triggers have gotten through support. But there's that pivot with a loss of momentum. Divergence creates the cyan line to the right. The divergence doesn't print until the third bar. The only thing that we're sure of at the moment is that there was a loss of momentum right here at this pivot. The market pushes up, and it's when it comes back down and it reaches the line. Does the divergence line have to be printed above or below the current price as being off to the left? So D-Rock, let me just find where divergence printed. So the market's coming up and there's potential for divergence. And the market comes up and there's potential and there's potential. This magenta line isn't there yet. This magenta line prints right here. 6 points away from the top of that pivot. That's when it is true. So it'll print off the pivot. And if it's from a high, then price will definitely be below it. And if it's from a low, price will definitely be below it. And then guys, your divergence stops printing when it's no longer part of the equation. In this case, divergence printed. When all the trigger lines get back below it, it's no longer true. Same thing happens here. And you'll see divergences print throughout the day, guys. You'll see them print from a high. You'll see them print from a low, right? So this divergence didn't happen until this bar. And notice how that pink line is still in play, right? And if price gets to it later, then we're going to have to check it out. And here's crude oil. This divergence line stopped printing when this divergence line printed, right? Great question. So this divergence line prints somewhere up here, but when price comes back to and reaches that divergence low, all you have to do is ask yourself, where are my triggers? And if your trigger lines remain above, now we have a termination condition. Is everybody comfortable with that? Not a termination, but when price reaches it and triggers remain above, now we have a pivot stop out of a prior divergence line condition. Now we have a termination condition. If this termination condition, this no triggers through the line termination condition, creates a reversal in the market, we're going to call this a strong bottom. These pivot stop outs are powerful on their own, guys, but they get even more powerful. They get even more powerful when they happen at fibs. And here's your reminder that 90% of what you do during the day is sitting on your hands, guys. If you were in a long position, you may have taken it all the way up to the point where the market is likely to stop. But when price reaches that area and none of the trigger lines break, Nexgen users, this is your big visual. Don't take any more long trades. Not in the moment. Let's look for the reaction. The reaction is a huge push down all the way to support, all the way to that mid band. And when price gets there, all of your triggers remain above. Once again, I can't go short. I can't go long. I'm sitting on my hands and I'm waiting for advantages. 90% of my day is spent letting the market do what the market does. And when my advantages are present, then I'm going to pull the trigger and look for a trade. Well, from support, notice how the large triggers don't even follow. This is a huge indication, guys. When there's a full bar back to those triggers, it's likely to close the gap to them. And then when price comes to that area of resistance, none of the trigger lines break through. That's a termination condition. Price reaches that divergence high and none of the trigger lines break through. That's a termination condition. Price reaches the second area of resistance and no triggers break through. There's three divergences or three terminations in the exact same spot, guys. That's pretty powerful. When that pivot stop out coincides with resistance, this is huge, guys. This is a market turner more often than not. And then from that termination, it creates a full reversal. And that full reversal ultimately gives me odds favorable momentum. And the odds favorable momentum has a clear path. And there's one of those tails. There's one of those potential entries for the highest probability trend trade. If you were able to sit on your hands and wait for the advantages, this is your best chance of success. And this is kind of what we do every day, guys. We're going to stare at the market and we're going to wait for advantages. Everything says down. The market is screaming. It smashed through Fibonacci support, right? The small and the large get below. The path is clear right until it reaches these yellow one-to-ones. And when it reaches these yellow one-to-ones, all you have to do is ask yourself, where are my trigger lines? And if none of your trigger lines have broken through the area, guys, sit on your hands and wait for an advantage. Sit on your hands and let the market sort itself out. And look what the market does right off of this area of support. The buyers take over, and then the sellers fight back, and then the buyers fight back, and then the sellers fight back, and the buyers push a little harder and the sellers aren't done. And guys, we don't want to get caught in that fight. We want them to duke it out. Some of them are taking profits, some of them are trying to go long. Next-gen users don't have to be in this fight. But when this termination condition gives you that full reversal, gives you that odds favorable, gives you that clear path, guys, that's your money maker. That's your highest probability trend trade. That's your foundation trade. That's the trade that just taught you how to read your charts. That's the trade that taught you how to recognize where the market was likely to go if you were in a short position from higher. It's that one that taught you to recognize where the market is likely to stop. And it's that one that teaches you how to recognize where the market is most likely to continue with the advantages in place. Everything we do revolves around momentum, a clear path, and an entry area. These termination conditions are the one that are going to pull the money out of your account faster than anything else if you fight them, if you hope that they break. Is everybody comfortable with the two-part process, guys? It's either broken or it's not. That's the new user approach. I either have a clear path or I don't. John doesn't care for these pictures, but I'm going to share them anyway. Termination conditions at a high when the market is trending up. Here's a pivot. It's a loss of momentum, not a termination condition. When price reaches an area, your recipe is written right on the picture, guys. When price reaches the area and the trigger lines remain below, textbook termination. So I want you to put these in your spreadsheet. Um, and just study them in the morning. Remind yourself what it looks like from a high and a low and what the recipe is to keep you safe from those nasty little termination conditions. Well, if we have momentum and we have a clear path, all we're missing now is an entry, guys. All we're looking for now is that area where the market is likely to continue. That area where the market is likely to continue is going to be an area, and when I say area, for a high probability trend trade, the lines that a trend trade originates from are going to be fibs, mid bands, or yellow one-to-ones, guys. There's always an area for a bounce. There's always an area for price to ricochet off of, and that's what creates the high probability scenario. So when your large chart says up, when your large chart has odds favorable momentum, when your large chart has a clear path, this is going to be the look on your small chart, on your 5-1 chart, if you're on crude oil, if you're on the S&P. You should have strong trigger lines. Odds favorable momentum can be defined on any chart, guys. It can be a second chart, a minute chart, a daily chart, a monthly chart, a yearly chart. Odds favorable momentum is the same consistent chart read. Small's above the large are wide, they're angled in the direction of the trend. This confirms the momentum of your larger chart. You should have strong triggers. Your large and synthetic triggers should be what we call favorable. And favorable large triggers means that those large triggers, the smooth large triggers, and the synthetic triggers, the dashed kind of stepped large triggers, those are just your large chart triggers, guys. They're not anything special. It's just the large triggers from your large chart. But when they're one on top of the other, when they're like if you set your hand on the desk and then you put your other hand on top of it, they're overlapping. When they're overlapping, this is your best look, guys. This is your look for the least amount of risk. This is your look for the best, easiest to recognize window of opportunity. So brand new users, I want you to embrace. I want you to embrace that favorable large triggers creates an advantage. It creates the smallest window of opportunity. It'll give you the least amount of risk on a trade. So when your large chart says it's time to look for an entry, you should have strong triggers on the small chart. You should have favorable large triggers on the small chart. And then you're just identifying those areas that are going to fall within. Remember, these are moving averages. They're coming up as the market's going up. So if you have an area a tick or two above, they're going to get swallowed up. Or if you have an area a tick or two below, they're going to get swallowed up in them. So I'm looking for fibs, mid bands, and yellow one-to-ones. Rule number 3 says that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So I'm going to wait for the market to come to me. I'm going to let the large chart, the big crowd, create direction, create momentum, give me a clear path. I'm going to let the small crowd, you yahoos that want to fight the trend, you guys that don't care about momentum, right? They're going to give us a little push, and they're going to give us a pushback to our point where the market is likely to continue. So it's imperative that we simply wait for a reversal bar on your smaller, faster chart. This signals the beginning of that retracement, that small pushback against the underlying trend. Guys, remember that your large chart has momentum and a clear path. There is nothing in the way to create a bounce. This is nothing but just angst and, I don't know, defiance giving you this pushback. So we're going to identify the window of opportunity, guys. And for a long trade, it's going to go from your highest point of support to your lowest point of support inside of favorable large triggers. And for a short trade, it's going to go from your lowest point of support or resistance to your highest point of resistance inside of favorable large triggers. And we call this the window of opportunity, guys. You will first identify your favorable large triggers, and then you will look for the areas that fall within. The lines outside of the windows are not a point where the market is likely to continue. We want to see them inside of those triggers, the large and the synthetic, which is why when they're trending one on top of the other, it creates a smaller window. And when you get that reversal bar, when the small chart begins to fight, you're going to activate your limit order right at that highest point of support or right at that lowest point of resistance. And at this point, you are 100% powerless. There's nothing else you can do. The only thing you are in charge of as a day trader is whether or not your rules are met, whether or not you have a statistical advantage entering the market. And if you have advantage of momentum, if you have the advantage of a clear path, your limit order goes at the highest point of the window. And guys, this becomes your highest probability trend trade. My window is not from the top of the triggers to the bottom of the triggers. That's a huge area. It's smaller if they're favorable, but your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Your limit order goes a tick or two above that highest point. Guys, give me a Y if you're comfortable with the look, if you're comfortable with the idea. It begins with a reversal bar. At the time of the reversal bar, find your triggers, find the areas inside, and get that limit order at the top of it. Sit on your hands and see what happens. And here's your scenarios, guys. The market may come close and then start to go without you, and this is where the fear of missing out jumps in, guys, and you jump into a trade not at the best areas, without a bounce. And if you jump in without that bounce, you didn't do anything to assure a winner. All you did is guaranteed a bigger loser if this is one of those 20 to 30%. If price hits your limit order, you're in the market. And here's the best part. You're in the market with the advantage of momentum, with the advantage of a clear path, and with the advantage of an entry area where the market is likely to continue, meaning that you have the highest probability trend trade that we teach. And here's the part of the trend trade, guys. It may go to the window's bottom. It may go to that lowest point of support. I want you to be ready for that, because if it goes below the entry, don't chase it. That's not your amen, chef. It may go to the bottom of the window, guys, which means that you're going to see negative equity in your trade, which means that you're going to look at a trade that you're scared to death is going to run you over. But I'm going to tell you right now, sometimes that small crowd gets a pretty good push and the market continues right from the bottom rather than the top. And that's why we define the window. But anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So we're going to manage risk before we ever manage profits, guys. We're going to put a stop below the window of opportunity, typically 12 to 14 ticks. And if for some reason the market pushes beyond that window, it's going to go head first into our stop. And if it goes into our stop, we're out of the position, guys. It's part of that 20 to 30%. And I say it every day, and I want to say it again, that small losses are a normal part of a positive equity curve. It's typically 12 to 14 ticks, D-Rock. My initial stop if I trade the S&P or crude oil is 12 ticks. But it's not 12 ticks cast in concrete, guys. It's not 12 ticks. That's where you leave it. It starts at 12 ticks, and your 12 ticks may be all the way down here. You might need to reduce it 3 or 4 outside of the window, right? Or your 12 ticks may be right here, still inside the window, in which case it's going to be more risk to get it outside of that window. So the 12 to 14 ticks just gives you reaction time if the market's moving fast. But guys, this is your entry for the high probability trend trade. This is entering the market with all those advantages where it's most likely to continue. And guys, this is the trade that I refuse to miss. Because 70 to 80% of the time, guys, it's going right to that fib. Chris, it is all digital and it's electronic, so your stops are in place. So if it crashes mid-trade, your stops are still active. I wouldn't let it crash and not try to recover at ASAFP, but they are active. And guys, from this entry, the market continues with momentum. The market continues with direction, with a clear path, and it goes right to that Fibonacci area. PFI, who cares what I would do? I don't chase trades, man. And guys, let me be real honest with you for a second. I don't chase trades because when you chase trades, your risk sucks. When you chase trades, your reward sucks. But if you wait for a termination to create a full reversal and that full reversal gives you odds favorable, guys, look at this pullback to resistance inside of favorable large triggers, and down it goes. That's what it means. Yep. So you're trading 6 contracts, 12 tick stop loss, 20, 30. And guys, horrible entries create more risk. Let's do an example, right? You guys want to do an entry together? There's so many of them. Let's see how this one looks. Let's do it. And guys, let's see if we can find a great illustration of why we do what we do, why I teach what I teach. There's a few opportunities in there. I'm hoping to find one that's super smooth. Because remember, it's a class, right? So I'm going to do this. Because I always get my straight A students who are like, but Mark, it's not 100% clear path. So let's do this. Using the most current bar on crude oil. So let's go through the whole process. What does Mark Novak do when he looks for a trade? Guys, what's the direction of crude oil? Remember, the most current bar gives me everything I need. What direction should I be looking for rules to be met? This is how I approach a trade every day. When you ask me, would I ever do this, would I ever do that, I'm going to go through my thought process 100%. What direction am I looking for rules to be met? Chef, up. Absolutely. Because the background is green. Once I establish that I have an uptrend, guys, I have to ask myself, do I have odds favorable momentum? Which means, do I have small triggers above the large triggers? Are the large triggers wide? Are they angled in the direction of the trend? Guys, is rule number 1 met? Do I have the advantage of momentum on my large chart? Yes. And then I have to ask myself, has price reached an area? Remember the recipe? In order for it to be a termination condition, price must reach an area. And if it hasn't reached an area, it's not a termination. And guys, if I have this off in the distance, and I'm going to make it red so that it's resistance. And let's go through this. If my red fib is right here, has price reached resistance? Not so much, right? No. So remember that recipe, price reaches. And if price reaches, then it can be a termination condition. Otherwise, it's just a target, guys. So I have odds favorable and I have a clear path. What does that mean? It means that I've made the decision that it's time to look for a trade. This is when I turn my attention to my smaller, faster chart. And I'm looking at price. I'm looking at my trigger lines. I'm looking at the large. I'm looking at the synthetics. Everything is wide. And see how these large and synthetic, they're close, but they're not right on top of each other. Which means that when I'm looking for areas inside, I've got a pretty big window. And they're coming up and they're coming up. And guys, there's my reversal bar. At the time of the reversal bar, the only thing that I need to do is look from the top of my triggers to the bottom of my triggers. Is this my window of opportunity? What do you think? Is this where the market's likely to continue? From the top of the triggers to the bottom of the triggers? Absolutely not, guys. We're better than that. Here's your key. Let's refine it even smaller. From the highest point of support, Fibonacci. Fibonacci support, D-Rock, is my highest point of support. What's my lowest point of support? A green midband. Guys, here's your window from the highest point of support. Do not get infatuated that trend trades come from midbands. Trend trades come from areas inside of favorable large triggers. Those areas can be fibs, midbands, or yellow one-to-ones. Guys, your job as a rules-based trader is to activate a limit order a tick or two above that highest point of support. Give me a Y if you're with me. The reversal bar prints. I'm going to activate a limit order a tick or two above my highest point of support because I have odds favorable momentum, because I have no termination conditions. And there's nothing for me to do now, guys. Here it comes. I don't know if it's going to get me or not. I'm getting nervous. Should I jump in? What if it doesn't make it? What if the market goes without me? All of these things, guys, your palms are going to sweat. Your heart is going to race. What you're doing for your first 30 days is identifying your best of the best entry, because great entries create manageable trades. And here it comes. And you're in the trade at 90.95, which means that your initial stop was right here around 83, right? If the top is a midband and it changes as price gets closer, like the midband keeps coming up, I'll adjust with the midband. I'm not just activating and sitting on my hands. So great question, D-Rock. If the midband continues up, I will adjust my entry to stay a tick or two above that midband if it becomes my highest point of support, or it is my highest point of support. So there's 12 ticks, right? That's my initial risk. The bottom of my window is at 93. I could probably reduce that to 85, right? I'm going to give it room, but I'm probably not going to put the full 120 on there, because if it doesn't go from 92, 93, it's probably not my trade. Does that make sense, everybody? I typically keep it around 12, 10 to 12, depending on what's going on. I give it room to breathe, guys. They're areas. And it comes down, and it comes down, and now new users are panicking. And then it gives you a reversal bar from the area inside of favorable large triggers with all of the advantages. And watch what happens to your risk. You have $50 risk on this trade at this point, guys. Your job for the first 20 days is to identify entries. Your job is to scroll back on these charts, and every time you see one of these tails and the rules met, circle it. Whoops. Where does it end up if you circle the tail? Well, that was right at resistance, but that's without the advantage of Fibonacci there. We don't know if we had a clear path. But if you scroll back and you do this every day, guys, in your first 20 days, your market goes back 10 days. Your historical data goes back 10 days. Go back and find the rules being met on your large chart. Circle those tails. If they line up with support or resistance inside of favorable large triggers, you have a high probability trend trade. I want you to take this picture and I want you to burn it in your mind. I want you to learn this look so that it becomes easy, so that you can recognize it in the moment. This is your highest probability trend trade. Upload it to Screencast. Go to your spreadsheet. And under your favorite looks, your perfect trade look, drop it in there. Because guys, this is how you're going to make money as a new user. On the large chart, Chef, keep it simple. Just keep it simple. If your small triggers are above the large triggers, the momentum is still up. Keep it simple. Because what's going to happen is every now and then, you're going to have odds favorable momentum, and you're going to say to yourself, oh, but they're starting to pinch. They're starting to roll. And it's going to mess you up a little bit. You're going to be like, oh my gosh, I better not take this trade. But the reality is, this market's going to the downside with odds favorable momentum. This market has a clear path. It looks like it's tweaking a little bit. You do have two divergences, but look at those areas inside of favorable large triggers. So I want you guys to study it. Scroll back. And remember, they can't all be winners. But if you get to the point where you recognize that momentum, where the areas at least have the potential to break, where the smaller above and the larger not, scroll back. What's it look like? It looks like a pullback to support inside of favorable large triggers, right? That's the same one that we just took. And then scroll back. And what's it look like over here? Is everybody good with this? This is your study tool, guys. This is how you're going to develop faith in this trade. This is how you're going to develop trust in this methodology. How often does it happen? And then here's one of those instances. There's my tail with odds favorable and a clear path. Guys, is this my trade? My area of resistance is all the way up here. So PFI, at what point do you chase? At what point do you enter that trade that didn't make it? And this is just going back to the chasing thing, right? This is why I don't chase, because at this point it becomes unmanageable. It just does. It just becomes unmanageable. And guys, I always manage my risk first. So look at, and that's it. You wait, and then it gives it to you, doesn't it? Nice job. You caught this one, PFI? I'm always proud of you guys. But it happens all day. So I want you guys to get in the habit. And when you're doing study, right, and you're circling these, take pictures, annotate them, write your rules on them, and bring them to the classroom. And guys, it's not hard to follow your rules. Some days it's a little more difficult. But you have to have rules, right? That's the key. How many times have you changed your rules? That's what new users tend to do, and this is where people get in trouble. Is they say, I'm only going to take the high probability trend trade. I'm only going to take the absolute best of the best. I'm going to learn to be a chart reader, and I'm going to build a foundation, and my life is going to be amazing and simple, right? Here's a checklist designed to keep you focused on the best of the best. But then you're going to see John Novak post a trade that isn't a high probability trend trade. And you're going to try to take his trades. And you're going to see John Novak post charts with different colors on them. And you're going to change your chart to those colors. And you're going to see John Novak just bought a new toy for entry. And you're going to buy a new toy for entry. And guys, what you're doing is you're setting yourself up. And John, if you're listening, I'm sorry. I'm just using you as an example because of your experience. Is John Novak wrote the software. John Novak has been reading charts for 25 years. And if you've never met my brother or talked to him in any sort of capacity, let me go to the glossary of common terms. And I want you guys to see there is this in the glossary of common terms. Okay, everybody listen to me. HBNS syndrome. It refers to John Novak's state of mind, happy but never satisfied. He's always looking for a better way to do something. Guys, that's his job. That's why the software is so amazing. But every time he sees something, he shares it because it's neat. And when you have a discovery, you want to. But guys, he's going to recognize 1,000 things that you're incapable of recognizing. And if you try to do what John Novak does, if you try to do what Siva does, if you try to do what Nexgen Ben does, without having the foundation that they have, you're probably going to get your ass handed to you 75 different ways. Not that I've seen it a million times in the time I've taught this class. Keep it simple first, guys. Focus on your high probability trend trade. Focus on your entry for a high probability trend trade. And then once you get your entries, then you could start going out a little bit, right? Guys, here's that same checklist for you for my brand new users. It gives you the rules and then a visual of what it means to have them, right? That odds favorable, that anything can happen. How do I determine a termination condition? And how am I establishing my window of opportunity? Guys, this is your visual. If you're brand new and you're focusing on entries, you should study this every morning. You should look at this and review it every morning and make sure that you're giving yourself the best chance of success. Simplicity yields results, guys. The process yields results. We just learned the trigger lines, right? You guys are going to simulate. We're going to simplify. You have to learn them so that they are easy. You have to learn them so that you can recognize these trades in a matter of seconds. And now I'm going to give you guys this, and you guys are going to fight me on this. I don't know why. This is the KISS plan, guys. This is the Keeple simple. No, magenta divergence does not appear in the form of dots. Those are small swing one-to-ones, Dwight. I don't have any rules that use them in any capacity. This is the keep it simple plan, guys. The KISS method. Has anyone ever heard of the KISS method? You see it a lot if you spend any time in management. Any time in KISS, right? Keep it simple, sunshine. Because we don't say stupid, because that hurts people's feelings. Guys, this is your simple plan for consistency. And let me share the disclaimer. This plan is a stepping stone. This plan is not the end of your journey. This plan is the beginning of your journey. This plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with a high probability trend trade or 50-50 trade as a new user. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Gary, they are. Everybody should treat magenta and cyan lines as termination areas. They're 100%. Textbook, termination. It's the magenta dots, the small one-to-one swings. That's what he was referring to. But you're absolutely right, Gary. Divergence highs and lows can be terminations. Guys, your plan will change based on your experience. Your plan will change based on your ability to read charts. Your entries, your exits, the trades you take will all change as you grow as a user. This plan is designed to keep you on the right side of things, to give you the highest chance of success as a brand new user. Confidence comes through the memory of success. The more you chase, the less you'll find. Guys, if you've been on Apex for 6 months and you're still not funded, simplicity may be a good idea for you. If you can't seem to get above 40% winners, simplicity may be a good idea for you. That's what this is designed for, to keep you on the right side of things. And it starts with the high probability trend trade. Notice that it says never fight the large chart direction or triggers, ever. I would say 70% of the losers that come from brand new users fight large chart direction or trigger lines because they form an opinion. You can't fight trigger lines if you're focused on odds favorable momentum. So here's your rules for entry. That's all you're doing, 20 days. Snorri, I can't stress it enough. In my own trading as well, guys, I have screwed up trading 1,000 times. The better I got at reading my charts, the more I strayed away from simple rules because I began to form opinions. Everybody's done this. It's part of the learning process. And then you get to the point, and you know what my brother said to me one day, guys, and it really stuck with me. He said, Mark, eventually you're going to get so tired of losing that you'll stop breaking your rules. Eventually you'll get so tired of losing that you'll stop breaking your rules. And he was right. Eventually I got so tired. So PFI, everybody in the room, from start to finish, all 41 of you, so that you don't think I'm singling you out, so that you don't think I'm excluding you. If you see your avatar, this post is for you. Tired of losing. If you see this post is for you, guys. Keep it simple. It doesn't have to be difficult. If you're not winning more than you're losing, you should be following a set of rules that have been proven to allow you to win more than you lose. It's a good one. And D-Rock, here's one that is every bit as good and not quite as long. 7 Habits of a Highly Successful Trader. You should read it every day for 30 days. Guys, for 20 days, define your entries. For 20 days, get in at the absolute best spot. The link is right above you. I gave you a link to the PDF file. For 20 days, don't worry about anything other than that trade and getting in at the right spot, because great entries create manageable trades, guys. That should be on a coffee cup. So if this is the first step, getting into the market at the right spot, guys, the second step is management. Management is a byproduct of being able to read the charts. Management is being able to recognize change rapidly through reading your indicators. So the same way a mechanical approach is great for getting into the market for the new user, so is a mechanical approach on your management. And remember, everything starts with the best of the best entry. Area inside of favorable large triggers, guys. Initial stop outside the window. This is it. And at this point, there's nothing for you to do. You either get stopped out, it's a small loser, normal part of a positive equity curve, cost of doing business, the market is wrong, however you want to say it, or the market gives you a reversal bar. It's nothing but if then. If the market hits my stop, I'll exit. If it gives me a reversal bar, then I'll reduce my risk a couple ticks above. Super easy, right? And then once you have your risk reduced, there's nothing to do. Either your target gets hit or it does not. Guys, in this super simple plan, the first target's $100, and it's done so. It's done so to create confidence, to create elation, to give you dopamine, right? To get the serotonin going. Guys, when you hit $100, you hear NinjaTrader say profit reached or profit target hit or whatever it says. And they can't take that money from you. That's $100 and you're feeling great. If I walked up to any of you on the street and handed you a $100 bill, you'd be like, heck yeah, that doesn't suck, right? But for some reason, traders hate $100. They hate $100 because they think that there's always more. Why not get paid? We're in this to make money. Get paid at $100. Reduce your risk to zero. You have nothing to lose and you've already been paid, guys. And it makes it easy to hold for the second target. The second target is only $200. You have nothing to lose and money in the bank, guys, and it's either going to hit you break even. And I'm going to tell you right now, there's going to be a lot of break even trades while you're learning to read your charts. But if it hits that $200, it's a $300 winner, guys, and that feels good. $300 in your pocket feels great, guys. And that mechanical management plan's right there in the spreadsheet that you have. And it's also written out right on that KISS plan. That's it. I'm trying to make $300 a trade. That's it, PFI. All you guys holding for home runs and getting run over, watching it go against you, you are so dejected. You are so upset. Man, I was up $300 and I hoped that it would go to the next fib and it didn't, and I gave all 300 back. I wished it would go. Guys, $300 only twice a day is a $600 day, right? What is that? $3,000 on the week, $15,000 on the month, and then some crazy math. Figure out the year. Chris L, okay. I want to be better looking. Didn't happen though. I know you are. But here's the deal. So Chris, what if you can make $1,000 a day, right? And you get to the point with a high probability that $1,000 a day, maybe you're trading a 4 lot, a 5 lot's pretty good. Let me do it simple math. $100 trade, $100 trade on a 1 lot is a $1,000 trade on a 10 lot, and it's a $10,000 trade on a 100 lot, right? So if you find a scenario where you can make $100 consistently more often than you lose it, think of Ron C. If you can make $100 a trade and you do it on a 5 lot, right? And you make $500 on that 5 lot, and you make another 500, right? And then you make another 500, and you're up 1,500. And then let's say you lose 300 and you're only up 1200. Guys, small bites, home runs. A lot, Sydney, is just a contract. So if you're trading a one lot, you're trading one contract of the S&P. If you're trading a two lot, you're trading two contracts. So when you come over here, the quantity is one, that's a one lot. Quantity is two, that's a two lot. Quantity is three, that's a three lot. Um, I like trading two contracts as a new user on Simulator because it gives you the opportunity to get paid to get break even. And guys, the whole reason that we hold for the second contract, or the whole reason that we go break even, that we get paid early, you're welcome, is it becomes easier to hold, to trust the large chart when you've got nothing to risk. Is there ever risk to consider where there is not sufficient volume to move? You may get different fills, Chris. If you're trading 100 lot and you try to get in, let's say at 100, you may get filled at 100, 100 and a quarter, 100 and a half, right? You need someone on the opposite side. Yeah, I do, D-Rock. Not always. Sometimes I'll hold for bigger moves. Um, but here was a trade this morning. I took my entry. I took my $100 and I got my risk to break even because things weren't as pretty over here. And I want you to see this trade as well, guys. Look at the large triggers in this trade. My window of opportunity coming into this trade was this big. That's a lot on a 50-50 trade, isn't it? Because I don't know if this area is going to break. So I get in, I take a conservative entry, I get paid, and then when things change and I get to the wrong side of stuff, I don't sit and hope. I took $100 on this trade. That's it. Just $100. I'm going to do that 5 more times today, and I'm going to retire happy. So, doesn't have to be home runs, guys. Base hits pay bills. So embrace the idea that it can be simple. Embrace the idea that all you need is a plan giving you an advantage. And guys, here's that 50-50 trade. There's your first medium probability trade. This is the best way to take a medium probability 50-50, guys. Without divergence, with strong triggers, from a good top or bottom. Look at that. Divergence, divergence, divergence. Do you think it's a killer? It might be. This isn't your end-all be-all. This is giving you the best chance of success in the beginning. So guys, take this plan. Take this plan and embrace it. And every time somebody sends me an email, Mark, I'm screwing up. I can't make any money. Mark, I'm screwing up. I can't find any trades. I'm always going to resort you back here, guys. If you ask me privately how to be successful, it's the same talk that I have in here. Keep it simple. Focus on the best of the best. Be willing to sit on your hands and do nothing when there's nothing to do. Never had anybody follow this checklist and do worse than 70%. Ever in the history of the checklist. But the average user's bored, right? They want more trades, and that's where the KISS plan comes in. It gives you that extra trade, gives you that extra thing to look at while still focusing on advantages. You post it on the chart right in front of you. I love it. Or on the wall right in front of you. Guys, I write it. True story. I write this on a piece of paper. I write my plan for entry on a piece of paper um, almost every morning in a spiral notebook just to remind myself what I'm looking for going into it. Because I'm human just like the rest of you. And there's going to be days where I have a wild hair and I'm going to do my best to break rules. And I don't ever want to do that. So I focus on reiterating what are the advantages, right? And I go back every morning. You guys think I just tell you to keep busy. I go back every freaking morning and I look at what I did yesterday. What worked? What didn't work? What brought me success? What didn't bring me success? What made me nervous? I had one day, true story, I tried to hold for home runs. Um, And I went back and I looked at my trades and I realized that I took a loss on my second contract on almost every trade that I took. Because instead of managing the trades, I just put them in like Ronco, set it and forget it, and it didn't work. So D-Rock, that's why I manage a little more aggressively, why I tend to be a little more conservative, because my brain likes it. My brain prefers easy, and that's just it. So guys, I'm going to take 5 minutes. I'm going to go stretch my legs, and I'm going to breathe through my eyes for a second. When I come back, we're going to get through and we're going to start talking about the charts that you guys posted. We're going to start talking about your high probability trend trades, all your questions. I see it, Ron. I'll grab it. Um, so if you have a question, post it in the room. If you have charts, keep posting them. When I come back, I'm going to go through everything that you guys have posted, and we're just going to talk about advantages, right? Maybe we'll talk about odds favorable momentum and no terminations and pullbacks to areas inside of favorable large triggers. Maybe we'll discuss that for just a second because it sure seems to be working live right in front of you, doesn't it? Why do you need anything else? I'll be back in 5 minutes, guys. I'm kind of excited about the day. So let's take a look. How many trigger lines got through that fib? What do you think, guys? Price reached support, absolutely no trigger lines broke through. Termination condition, right? Look what the market did. Who's going to show me a picture of getting in at the bottom of the window of opportunity here at, what's the price there? 11? And 11 goes all the way to 01. Did anyone catch it? Did anyone get short on that 100% rules-based trade? If not, you have to ask yourself, why didn't I take it? Why did you talk yourself out of such a beautiful trade? Does that make sense, guys? If you didn't take this trade, you have to ask yourself, why not? You have to post that picture in the room and say, Mark, what scared me out of this? Let's talk about it. And then we'll look at it. All right, guys. So when I scroll up, I'm going to go, and I just want to show you guys, I do this every day. I have to scroll all the way to the top of the morning. And that's how I get to your pictures. So if I click on your chart and you have a question, I'm going to try and scroll back and forth. Um, but it may take just a second. So let me scroll up to the top. That was last week. All right, Joel got us started. This was actually at midnight last night, but let's look at it. Joel 50-50, right? No clear path. Well, where you circled it is directly into a, oh, it's almost there, but it didn't make it. And then it hits the fib, and absolutely no trigger lines go through, but you take it anyway. And you manage out at the trouble spot. So that's some great heads up, Joel. You're trading into the termination condition, honestly. Um, Joel, are you with me? And guys, is everybody with me? I really want to emphasize this for 50-50s. And this is so important. Nobody ever listens to me on this. It hurts my feelings. Not really, I'm just kidding. Guys, strong triggers smash areas. Give me a Y in the room if you're getting what I'm saying here. Strong triggers smash areas. Weak coming back to the large, damn near anything can happen triggers. Those don't smash areas, guys. Those are crap. If you're gonna take a medium probability trade, look, hoping an area breaks, this is your look. Give me a Y in the room. That's your look. Up here, guys, this is garbage. This is overrun, especially with divergences printing. These are going to kick your butt, and these are the trades that new users are like, but it was 50-50, Mark. But the key to 50-50, and I say it every classroom, and this is part of the human, part of the curse of being human, guys, is that in order for it to even be considered a 50-50 trade, you have to have odds favorable momentum. And I think Gary put it, strong triggers break fibs. You have to have odds favorable momentum. And then if you're using that simple plan, you have to have odds favorable momentum, no divergence. Like, give yourself the best chance of success. Joel's been reading charts a little longer, and Joel did a great job managing that look. But if you're a brand new user, you're going to lose that more than you win. And then Sydney, all right, I'm going to come back. And guys, sometimes I feel like I'm picking on you, and I don't mean to, but I have to share this. So Sydney, you're covering everything. I don't know where you're getting in. And I feel like I've said this once or twice, so I really want you to help me. Really want you to help me. Everything's covered up on, not this one. Where was your other one? Because I think you probably had a great read. But everything's covered up, right? Everything is covered up. And in order for me to give you the best feedback, I'm going to show you what I saw based on what I could see. Is you put divergence, but there was no divergence. You put divergence again, but there was no divergence. So the reason that this allows me to give the best feedback, guys, and this can be anybody's chart, is let's work on what divergence is and what it means. So do you guys remember the lesson on divergence? In order for divergence to be true, I have to have one of these cyan or magenta lines. Otherwise, it's not divergence. It's just a pivot. And that's important. That's important if you're going to use those divergences as part of your plan. Large triggers roll up. And once again, the large triggers, I don't know if they went red or not because it's hidden. So make sure that you're annotating off to the side and using those arrows so that I know. And then if I had to guess, Sydney, it's just a pivot off support. That's it. Just a termination. That's all it is. Or it might not even be off support, right? Because there's no divergence there. It's just a pivot. No divergence, no divergence, right? So it's important, guys, that if you write those arrows, it's going to let me know. And if the trigger's rolled, I'm not sure because it's hidden behind something. Just make it easier on me to help you, right? And I still don't have any idea where you entered because there's no entries anywhere. You wrote entry, but did you enter momentum style? Did you enter down here below all the fibs when the small triggers are down? Um, and I'm so sorry if it feels like I'm beating you a little bit, but it's so hard for me to help you with the way this chart's annotated. And it's a process, guys. We're going to go back and forth all the time, and I'm always going to try and coach you into the way that allows me to help you the most. And then, because I don't ever want it to feel negative when you get feedback, guys. I don't ever want you to be like, God, he's such an ass. Why does he have to do that, right? Um, Let me show you the difference here, Sydney, because I have your charts today too. Where did it go? Hold on. Almost there. So on this chart, that wasn't the one. That was the after. Hold on. On this chart, check this out. And this is such. So you're only looking for, see, but how would I know that? Because you've never told me. You've never told me that you only look for momentum. So now that I know that, Sydney, we're a lot better, right? But look at on this one, showing me your entry, showing me the odds favorable, right? If we just move these off to the side, it's easier. But do you see how it's so much easier for me to help you? Because now I know where you got in. Now I know what your large chart looked like. Because look at where entry is written. Is it down here? Is your entry down here, right? But now I know exactly where you got in. Does that make sense, Sydney? Is your chart open right now, Sydney? Okay. I'm going to give you this real quick because this is going to help me a lot. Now that I know what you're looking for, I'm halfway to giving you the best feedback because now I can hold you accountable to momentum style trades. Let me find the trade markers real quick. I would love to see you getting those entries and exits on the chart. It's going to make it so much easier for those momentum trades. There we go, right here. Do this for me and then save your workspace. Because as you work on those momentum trades, that's really going to help me see where you're getting in and making sure that the momentum is solid. And then together, you and I are going to work. We're going to work together and get you exactly where you want to be for consistency. We're just getting to the point to where I can give you the best feedback. So thank you for that. And I like that trade that you posted. I love the way you took it. That was solid momentum and clear path, and everything about it was great. That's the one that we want to repeat, right? Then Gary came in, said 50-50. Oh, clear path. He made it below. He gets in at the best area. Can you guys see it? And then he exits out, takes some quick profits, gets break even. Nice solid trade, Gary. And then Sydney, there's that same one that I think I just clicked on. Odds favorable, clear path, momentum style entry. And the only comment that I had on this one, Sydney, was that it's a momentum style entry. So momentum in, momentum out. These are rarely home run trades. And you have two areas closer than your first target. And then you have your second target all the way beyond the third area that could create a potential bounce. So as important as it is to take great entries, management will be your second side, right? Lots of places to kill momentum for a momentum style trade there. Nice job. I like the trade, and I think your execution was nice. And then there was your first spot, right? And you're going to hold it for the second one. I like it. And your stop is behind where the market shouldn't go. Really well done, Sydney. Ah, I love it when I can see what's going on in your charts. You killed it. And I hope that all makes sense. Nice job. All right, Jose. Everything is cranking on a clear path. So you go short and take it all the way to the fib. Beautiful trade, Jose. Everything said down, the path was clear, and you capitalized. Momentum style in, really, and then just you never even lost momentum until the fib. Beautiful trade. Really well done. I know that felt good. Let's see, who's next? Gary. Bad top, back to support in the mid band. You take the close on the correct side. Gary, nice execution. That's that gap theory all the way up. And then once it gets to those triggers, man, you got to say, oh. Nice. I like that you took the more conservative entry too. Really well done there, Gary. And guys, this trade, Gary, without a 21 chart, there's a lot of hope in those trades. And I like to remind that. The trade that you just took, it's beautiful. I like the way you did it. But if you allow a 21 chart to be odds favorable with a clear path, the likelihood of that trade winning goes up exponentially. Without that information, it's a lot of hope. Confirmation from where? Because market flow didn't do it. And you closed above support, but you closed below triggers on odds favorable momentum, right? So there's nothing on market flow giving confirmation. There's a close above the small triggers against odds favorable momentum. You see where I'm going with that? But if your 21 is screaming to the upside, you're not hoping. And then Dwight, momentum style trade, everything says up. You jump in, you jump out before the momentum is gone. I love it. Guys, taking that chart read, taking that momentum, turning it into a trade that fits your needs. And the cool thing is it doesn't have to be my trade. It doesn't have to be a high probability trend trade. Odds favorable, clear path, jump in, jump out, base hit, make some money, and then wait for the next opportunity. It's nice to be in and out of the market in 7 or 8 seconds, guys. It really is. It's nice to be out of the market in 7 or 8 seconds. Everything says down. The path is clear. There's the pullback. All right, PFI, let's talk window of opportunity, okay? And this is for everybody. I can't get both of them. All right, so let's do this. All right, guys. Large chart says odds favorable. Large chart says clear path, right? This is why we get in at the bottom of the window. We get in at the bottom of the window because everything is screaming, guys. We don't expect a huge pullback. So when we talk about window of opportunity and PFI, and this is for everybody, not just PFI, I want you to see something. There's a limit order on the wrong side of the one-to-ones. Does everybody see that? Limit order on the wrong side of the one-to-ones. Limit order belongs a tick or two below the lowest point of resistance. In PFI, that little adherence, right? That little adherence gets you into this trade, gets you paid. Adrenaline is the killer. Well, this isn't adrenaline, PFI. Historically, this is fear. This is hoping that that mid-band, no, there was a trade. If you're 2 ticks below resistance, lowest point of resistance, that's a high probability trend trade with a beautiful entry. 1 tick below those one-to-ones is where that market turned. 1 tick below that one-to-one is where the market turned. We're talking about the chart in front of me, right? Any other chart that you posted, doesn't matter. Guys, when I give you a lesson, when we talk about rules, and I say, hey, your entry's on the wrong side of resistance because we go a tick or two below resistance, what does that mean? There are no plots. I realize that because I see your order still in place, right? So PFI, if you didn't want to talk about what you could do better, why did you post the chart? Are you catching the lesson though? If you were 2 ticks below resistance, you caught the trade. That's it. Don't tell me about what you did later. Let's talk about in the moment. Let's take what I see and let's make it better. That's okay. Do you understand the lesson? Does everybody understand the lesson? With this much momentum and a clear path, a tick or two below resistance is almost your little safeguard. Guys, let's get in. And that's fine, Sydney. Isn't it weird that that happens? I've met people that can't, oh, they don't see shorts. They only see longs. Eventually, Sydney, you'll start to see those longs and shorts the same. But if long is your comfort zone, man, keep going for those long. So PFI, you were chasing the midband, and that's where we go back. And guys, this is how lessons happen. Because you have to post these. And PFI, I'm so thankful that you did. Areas inside of favorable large triggers, right? Because now not only are you getting the lesson, but everybody gets the lesson because this is a very common mistake. I mean, this is a very common mistake. And that's why it's because PFI, you haven't done enough study to trust the process. You don't care about the process, you care about the wins. As soon as you change that line of thinking to where I want to execute a trade that wins more than it loses, because that's going to yield results, right? Your golf swing gets you birdies. That power from swinging the bat gets you home runs. So you have to focus on the process. Guys, you can wish in one hand and shit in the other all day long. Tell me which one fills up first. That's channeling my father-in-law. He's looking down from heaven, laughing his butt off. But it's true. You can want to be rich all you want, but if you never take the time to have a plan that's geared towards making that happen, all you're going to do is keep wishing. So guys, remember, bottom of the window, top of the window, embrace it. And if you're not comfortable with it, stay on simulator and practice it. It's a great picture, PFI. There's a lot of great information there. There really is. And guys, when you post a picture in the room, you're not always going to like what I have to say, but if you listen to the lesson, you don't miss this trade next time. Let me see where I'm at. Dun, dun, dun. Gary, did we look at this one? Gary, everything says down. Gary says, here, let me help with that lesson. There's your entry. There's your exit. 2 divergences, you take another exit. And Gary, I wrote a note in the room earlier. Guys, when you're so good at entries, the way Gary's so good at entries, when you're chart reading, like there's a lot of you in this room that never miss the best entry, right? You did your study, you learned it, and then Daryl, you did your study, you learned the entry. So the next part of that is management. I don't know what that means, PFI. Seems to. So entries are the first part, right? I'll tell you what, fly me out to New York. I'll break your jaw. And while it heals, you can stick to a plan. How's that? I don't know. I fly first class, though, so you're going to want to look for it. And make sure you're insured. We're being silly at this point. Daryl, are you with me? Beautiful entry, right? Perfect entry. I love it. I love it. Quick profits. I love it. What made you hold? And I'm not saying that it's right or wrong. I'm not saying that it was a good idea or a bad idea. But as you work on your management, right on that chart, your entries are as good as anybody's. So when's it okay to hold and when's it not okay to hold? Um, Pivot stop out is likely to take out the previous pivot, right? So you're staying out. And this is for everybody, not just Daryl. Daryl, you're like, I've got only two divergences and the large chart's perfect. I'm going to put it where the market shouldn't go. I agree with it 100%. But if you're not comfortable the way Daryl is, write what gets you out, especially if you're prone to getting out early, if you're prone to getting out late. If you find that emotion leads your management plan more than having a reason, write it out and remind yourself every time. And guys, I'm not going to lie, I've written on charts, got scared, exited trade. But when I go back and I study that, and when I'm being very emotionless after the fact, when the adrenaline's gone, I can look at what I annotated and then I can compare it. Did it make sense really without the adrenaline, without the sweaty palms, without the fear of loss? Did my exit make sense? And that's how management plans get developed, guys. So I like it, but there was a trade earlier today where somebody jumped out with every advantage, and I'm like, well, right, what got you out? What scared you out? Because sometimes, guys, you're like, oh, I trail a stop. Well, at that point, you might just want to hit exit if you're trailing your stop where the market is likely to continue, right? Um, so that's kind of how that works. I lost my spot. Joel D. Rock. Sometimes I lose my spot. I think we saw this one, right? Was that PFI? That was Gary. We saw yours. There's Daryl's. Okay, now I know where I'm at. So we're back to PFI. And then PFI, there's that odds favorable, two divergences. You get in at the area, right? And you take profits right back down. That's it, Daryl. I love it. And that's all it is. Man, Gary, my spidey sense is broken. Chef, take care, man. Thank you for that. I appreciate that. My spidey sense broke. It doesn't work. My spidey sense forces me to make bad decisions. I'm not going to lie. So PFI, awesome. The rules were still met. You followed the entry, and you got out at the trouble spot and went break even. This one I like, PFI. Is it written on here? This is for everybody. Remember, if you write your questions on the chart, it becomes easier for me, so I don't have to scroll back and forth. I can't answer that for you, PFI. That's okay. I can't answer that for you. Does two divergences kill a high probability trend trade? Is two divergences an exit condition? There can't be a but, because you entered with two divergences, didn't you? There can't be a but. There can only be an if-then. If you have two divergences and you enter a trade, is there anything wrong with taking profits? Because what happens if these divergences push it higher? It might come all the way up to resistance, right? Guys, I'm a big fan of we do this to get paid. But PFI, you have to look at the conditions. Are the two divergences coming from the middle of nowhere? Or is it two divergences with strong triggers? Is it two divergences with weak triggers? Is it two divergences with this? Is it two? So you can't blanket rule, right? Gary had two divergences, and he got in late. But look at this chart. Odds favorable, all the way back. Late entry. And then he uses that momentum to get all the way up to Fibonacci resistance. Great trade, Gary. Two divergences isn't a deal breaker, guys. Two divergences just may push it down a little bit. NASDAQ is way quicker. And I like your entry on the correct side of the smalls when they're coming down strong. So PFI, if you're not comfortable with your rules yet, if you're not comfortable with in the moment recognition, NASDAQ may not be your trade. NASDAQ may not be your market. Maybe not yet. You can do whatever you want though, right? Joel, perfect entry. Exactly like PFIs. You identify the trouble spot. Two divergences and support on the 5-1 may change to a medium probability. Perfect entries make manageable trades. Joel, beautiful. PFI, just as pretty as yours. You guys did it exactly the same. I love it. Nice job, guys. Strong work. And then D-Rock, same entry. Chose not to take the quick profits. Oh, you did get $100 and then break even on the second. Heck yeah. All of you guys killing it. They are a different animal, PFI. I say it every day. Every day. Learn on crude. Learn on the ES, guys. It's smoother. It's not as crazy. The NASDAQ is amazing to trade. That's the only thing that I trade, but it's not the same rules for entry, guys. It's not the same rules for entry on the NASDAQ. There's too much indecision and overrun in the NASDAQ to trade it the same way that you trade crude oil. So this is what I like to see. Beautiful trade, awesome management, pragmatic, get paid. Beautiful trade, awesome management, pragmatic, get paid. Beautiful trade, awesome management, pragmatic, get paid. Guys, this is a career builder right here. Being able, thank you for that, Joel. Guys, being able to get in and not get married to the idea that the market has to straight line to the next line, right? Get in and get paid. It's all about getting paid. And then reducing risk when it's appropriate. And I think Daryl's second contract up here above the small triggers was definitely appropriate, right? Outside of the window of opportunity where the market shouldn't go. So what you saw were two very different ways to trade it. And neither of them were wrong. They were just different. Everybody's got different risk tolerances. So props to all of you and your great entries because the great entries made the trade manageable. And then Gary, termination conditions. So you chose not to take the trade. I love seeing those pictures when you guys adhere to your rules. And And then the flip side of that is I hate it when you have after the fact remorse, right? Because what momentum would have hit target one tells me is that you're looking for a way to trade into termination conditions. And just because it happened that time, you're going to talk yourself into trading into termination conditions, right? You're going to talk yourself into taking the short here because that time it would have hit target one. So guys, be careful on those. Be careful when you start it would have, it could have, it might have. Here's what happened after. Guys, keep it rules met or rules not met. Either your rules are met or your rules aren't, right? And Gary, your rules weren't met. So who gives a crap what happens after? It doesn't matter. That's hard, guys. It's hard to do that. It's hard to be okay with the idea that if your rules aren't met, it's not your trade, it's not your money, and it's perfectly acceptable to sit on your hands and do nothing. But if you start pining about what could have, would have, should have, you're going to change your plan. All right, Snorri taking one of those 50-50s. One thing that I can't see on this one, Snorri. No, no gap theory, Joel. Here's your reversal bar marker. Here's your large triggers. Do you see it? See how the large triggers are above the reversal bar marker? Which means that there's definitely not room for a full bar to print before it hits. That's a great call there, though. Great lesson. For the gap theory to be in place, these large triggers have to be below, kind of like they were here. That's that full bar hitting. All right, Snorri. It looks like it's not coming from a good bottom, but I can't be sure. Can you help me on that one with the read? This looks like the S&P around 830. Um, let's go see if we can find it. What do you guys say? Ooh, it hasn't done much, has it? No. Well, your fib update came through. So we got this 50-50. Love it. Story, I think you took the perfect entry. I think that perfect entry gave you the ability to make some money and manage out when it started back down against you. I think that's really well done, especially not coming from a strong bottom. It changes the dynamic a little bit. Really nice execution on there. And way to embrace the idea that you're in it to get paid, right? PFI, picture perfect, money, money. PFI. You got a second to chat? How'd you feel about this one getting into it? Were you confident? Were you nervous? You were nervous? What made you nervous? You're always nervous? That's fair. Cool. I love that you're doing this, though. You had a good top. You had odds favorable. You had a clear path. Your entry is perfect, dude. I mean, perfect. And you made 300 bucks, right? That's solid. Guys, that's it. That's the best of the best. But here's the big thing is you didn't just make $300, did you? Let's get over here. You took it on a 6 lot. So you made $300 right here. And then you made $900 here. So that's $1,200. Am I reading that right? That was a $1,200 trade for you? No? 6 lot in. Why so late? Oh, but you didn't hit the fib, right? Your entry comes from the area inside of favorable large triggers. Okay, so this is why I do this, because now we get to talk about the trust side, right? Is having that limit order waiting. It's okay. You're developing trust. So what do these targets look like if you're in at 11 instead of 725? That is 3.5 points difference, right? I don't care about the next chart. That's 3.5 points of additional risk. That's 3.5 points of profit pulled out of your pocket, isn't it? Does that make sense? Guys, this is why we develop trust. This is the only reason that I talk about great entries so much. That's 3.5 points. That's 100 and it was close, but it didn't hit it. You can see it right here. It didn't hit it. Guys, that's why this is your entry up here. This same trade, add 3.5 points to both sides. So instead of taking 2 there at $100, you took 5.5 at your first. Oh, you're trading NASDAQ. Okay. It's $120 extra risk. It's $120 less per contract on your first target. So by not waiting for the area or getting in at the area, you cost yourself about $800. It's still a nice trade. Nicely done. Let's see where we're at in here. A lot of great pictures today, guys. Nice job. Snorri, let's see what you have. Gap theory in play. Both triggers rolled, but not considering a short at momentum. No triggers breaking through the mid band. And you notice how there's no triggers through support here either, Snorri? There's no triggers through support either. So this is technically a termination condition. Coming from the great top, this is where, when it comes back and retests, I may start looking for opportunities from such a good top. And you have to gauge it and you have to see what's going on in the moment. But yeah, that gap theory keeps you from trying to do something momentum-y. Nice read. Just writing on charts, guys. Sometimes that's all we do. No trade. Might as well take a picture and annotate a chart, right? Bobby, trying to see where you got in. 35. So you got in down here. Termination. That was actually the HVA trade, Bobby. John and I were watching this and talking about it. That lined up with a high volume area, and that was a good one. And then you get out of the trouble spot, and with all the momentum, I don't think it's wrong to get scared into a fib with nothing near it, right? Especially after the market had railed down 100 points. But you just take that momentum, but you get in under the problems instead of above the problems. Nice read. Takes you up to the next level. Good job, Bobby. Little unorthodox compared to the high probability trend trade, but a great chart read. I love great chart reads. And then Snorri was watching this for some time and thinking there's nothing to do here. A lot of people being chopped up here, going long or short or whatever. And then finally things rolled. Strong tops. You were aware of those two divergences. And then when everything agreed, you got in. Snorri, can we talk about the patterns that make that entry such a nice one? So here's a bad bottom. that pushes straight to the midband, right? Straight to resistance. And then it pushes back. There's that fight, and you were absolutely right. And guys, it's just a pivot with a loss of momentum. It has nothing to do, there's nothing more here other than a pivot. It's 2 divergences, but it's not 3 divergences. And then it pushes back up to resistance again. Look at the difference in the triggers, Snorri, when it hits resistance the second time. And then when you wait and let everything agree, there's your entry. Because that is odds favorable, but there's your problem. And that's the one that may take it down. But it is a termination, right? So your management's nice. You did chase it a little bit, but the read is great, right? The read is awesome. And this is going to get you in tighter, especially when you know you don't have a lot of room to work with. It's going to encourage you to take that tighter, less risk entry. You did chase it a little bit, but your chart read was great. You stayed out of the moment, right? Or out of the moment. You stayed out of the indecision. You stayed out of the, gosh, nothing says yes. And you waited for everything to agree. And that's heads up trading. Like, that's awesome trading. Because you didn't guess, you waited for confirmation with everything to agree. And that's kind of one of the lessons that I try to put out there every day, guys, is when everything agrees, life gets easy. When everything agrees, trades are easier. PFI, 50-50 trade, 1 divergence, in at the area, and jump ship early, not sure why. Target move to break even, and you got stopped at break even. Yeah, it's an arbitrary stop move, PFI. That's what we call that. Arbitrary stop move. And I'm not going to give thoughts on trading NASDAQ and stops. The rules don't change. Stop where the market shouldn't go. And if you panic and move your stops, you're probably going to get stopped out. Don't you think that there's people on the other side of your trade that know exactly where all the cowards put their stops? I'm not calling you a coward, because I've been stopped out low tick so many times in my life. They know, guys, they know where you're putting your stop. They know where the psychological stop is. The psychological stop is the one that keeps you from losing money. The stop that makes sense, that keeps them in their position, is above the pivot. Does that make sense, everybody? Here's your reversal bar. What reversal bar did you put your stop behind? Yeah, but you moved it, right? Okay. I see what you're saying. So you're in at 75 and you're out at 73. So you're telling me that your first target on the NASDAQ is $40 per contract? You're telling me that you're risking $150 a contract to make $40 a contract. That's what you're showing me right here. That's your plan. You think so? And then 2 divergences on a 50-50 with weak triggers, you kept it at break even. Didn't have an exit condition. PFI, and man, I feel like I'm beating you today, and I apologize if it feels that way. PFI, you don't have a plan. You don't have a plan in place because there's zero consistency across the board, right? Which means that you're not following an if-then scenario. You're getting into the trade and you're saying, oh shit, I need to get out. Because what if it bounces against me? And that's okay, that's normal. But don't convince yourself that your plan is $40 per contract on the NASDAQ and willing to risk 180. Your target was down here. Okay, so why did you move it? That's the question you have to answer. Why did you move it? Why did you get out for $40 right here? And I'm telling you, you took 6 contracts in the exact same spot. You entered 6, you exited 6. There is no target 1. There is no break even. You exited. You know I can see this, right? I can see your chart. And I think maybe you're trying to convince you. 6 contracts went in right here. 6 contracts came out right here. And it was a target and a stop. There was no break even. Your break even, PFI, is this price right here. And price didn't come back to that area until all the way over here. Do you see what I'm saying? You moved your stop. Why did you move your stop? That's what I'm asking you to ask yourself. Why did you put your stop right where the market was trading? Do you understand? So maybe this is it. Maybe it's an idea of the concept of break even. Break even doesn't mean lock in money where the market is trading. Break even means put your stop where you entered at the same price where you entered. This line is break even. This is not break even. So you're telling me that it came back up and hit break even, but all 6 magically ended out at the same spot? So it slipped you in the direction of the trade as it retraced back. Okay. I'm not saying you screwed up. If you post a picture and what your picture says and what you type in the room don't match, I have to ask these questions, right? So what's your target for the NASDAQ? Look at your plan right now in front of you. What's your first target for NASDAQ? How much money? No, I'm not saying I don't believe you. And if it's $40, that's cool. Guys, I have to remind you that your plan, it doesn't matter to me what your plan is, but I need to know what it is so that I can try to hold you accountable a little bit, right? All right, so 10 ticks. So PFI, you're using a crude oil or an S&P strategy on the NASDAQ. See how we were able to diagnose that? Yeah, why not use the one that's preloaded? Most people are using 24 ticks on the NASDAQ because it gives it room. How much money is 24 ticks on the NASDAQ? $120. How much money is 12 ticks on crude oil? $120, right? The risk is there, but it's a different market. So you can't use a strategy that would work perfectly. So how much is 40 ticks? It takes 40 ticks to get to $100. So if you're looking for 20, or no, hold on. 20 ticks is $100. Oh, no, 10 ticks. God, I'm doing the math. 20 ticks is $100 on the NASDAQ. So 10 ticks on the NASDAQ is only $50. So that makes sense why that was so close. But do you see how, that's alarming to me to be so close to your entry? Because no, it's not dumb. You're learning to trade this market. But if you and I don't have these conversations, if we don't go back and forth, if I don't try to get into your line of thinking, we don't ever get to the point to where we realize that you're using an inefficient stop plan for a market that needs a different one, right? So it's never me coming after you guys. It's me trying to make it better. And if what's on your chart doesn't make sense, then I have to ask these questions. And if you feel put on the spot, I apologize. But I am obligated to ask these questions so that we can figure it out. All right, D-Rock, odds favorable momentum, fourth larger trigger, never technically not above. There is no fourth larger trigger. D-Rock, are you with me? Or did D-Rock split? No, Chef split. Cool. So D-Rock, let it either be. It either is or it isn't, right? These two lines work as the large triggers. So in order for the large triggers to be through, just let them go through. So it's a 50-50. And there it's a 50-50 with the divergence. And then we're going to capitalize even more on this or exaggerate. It's a 50-50 with the divergence not coming from a termination that creates a full reversal. I do. I don't ever want to seem like an asshole. It's important to me that I don't. And sometimes I feel like I'm coming across like that. So I don't ever want to be, guys. This is 100% just trying to get you guys where you want to be. And this is why writing these things on the chart, right? Like if you have a management challenge, write it on the chart. If you have an entry challenge, write it on the chart. Like, help me help you. And yeah, it is. And it's so close, D-Rock. But at the time of this bar, they were decidedly underneath. So yeah, it was still 50-50. Because I think what happens in the moment, and I love taking pictures of pictures because after the fact, sometimes it looks a little different too, right? So on that bar that you entered on, you can definitely tell that those large triggers are still below. But in the moment, when it starts getting close, you're kind of like, oh, here we go. And what I like to look at sometimes is it's a 50-50 on the divergence. It's a 50-50 on this fib, and it's also 50-50 on this fib, right? Because here is the bottom end of the large trigger. And I'm trying to get it. And the large trigger, that bottom end is below all of it. Does that make sense? So there's actually three areas that you're hoping break here in the moment. Give me a Y if that makes sense. There's three areas that we're hoping break, and I'm hoping with you. And then when we break it down just a little bit further, D-Rock, notice how we're not coming from a termination condition that creates a full reversal. So it's really just a pivot in the middle of nowhere, which doesn't necessarily kill it because you've got great momentum. But then we get this divergence and you couple it with that one. And this, if we go back to the keep it simple plan, and this is one of the reasons why I put this together for the 50-50. There's a couple things that are kind of on there. One of them is one area. Because the more areas that you're looking to break, the more work that large chart has to do, which with the best of the best triggers can happen for sure. You have the smalls outside on the 5-1, absolutely. Whoops. I'm trying to just use the highlighter. So, but this was a no, the no divergence, right? That was a no. And then from a good top or bottom was also a no. So when you go through the checklist, about half of it's yeses and half of it's nos. And then there's that little reminder for the new users that divergence is no trade. It's okay. D-Rock, if you're on simulator, get emotional 1,000 times, right? Take these trades, post them in the room. Let's have conversations about them. And I'm telling you, in the moment, as a brand new user, you are going to be emotional, and you're going to pull in like half the picture sometimes, right? You're going to pull in, you're going to go, oh, it was a high probability trend trade. What the hell happened? And then you kind of take a breath and you step back and the trade's over and you're like, oh, wait a minute, man, if I put that on the 50-50, okay, I totally see what's going on now. And I do it too. It didn't feel good. That was your brain going, I've seen this. It's not right. It's not right. And then let's celebrate the fact that, look at that entry. That's a rock star entry. If the rules were met, D-Rock, what this tells me is that you understand exactly where you should be entering the market, right? And now you're in the process of putting it all together, of being able to read it in that moment's notice and get the correct information from your chart reads. So, dude, it's a victory. It's a total victory. The same way PFI's management is a victory. The same way someone accidentally trading into a termination condition is a victory, because you're going to get better from that moment, from that one picture. You're going to have a little bit of clarity that takes you to the next level. Alan's a great example of that. Termination, 3 divergences, triggers roll, and Alan, you just take a momentum trade. And you take it well. I don't know what an MIT order is. I've never heard that term. Type out what MIT means for me. Is that what John uses? 2 50-50 trades. You're absolutely right, Joel. And look at the split on the triggers, though. And look at those large triggers all the way below. That's one of those times where the gap theory doesn't happen. And it's easy to create. You mean the stop order? Buy stop. I got you. Okay, that makes more sense. I was like, wait a minute, what's the MIT? I thought I was missing something. It helps, doesn't it? Because if it creates the requirement, it keeps you from jumping the gun. It keeps you from anticipating. I like the stop-in orders on NASDAQ. I don't use them on other markets. But I do like them on NASDAQ if I have to wait for an order, if I have to wait for an entry. Joel, I like that I don't see entries on this one, right? Because look, the gap theory is full in place. And these might go, and you just have to be okay with them going without you sometimes. Great chart, Joel. Does anyone else have as much fun as I do doing this? I love reading charts. I love going back to charts that are standing still, because there's so much information when the emotion of trading isn't there. There's so much information there. Not coming from a good top or bottom, no worries. Odds favorable, absolutely. Clear path, getting there, it's 50-50. Entry inside of favorable large triggers, it could have been. So it's like Super Mario with money, that's it. So PFI, cool, I like it. What did you miss on this though? Just for chart reading. So let's look. That's a pretty good entry inside of favorable large triggers. I like it. Only 1 divergence against the trade. Even that one, potential, only 2 divergences against the trade. You're trading into 3 divergences on split triggers with not much room. At this point on this entry, there's not much room to get in. Does that make sense? You don't have a lot of management room, a lot of wiggle room. And I'm not saying that it's not the right trade. Let me show you one of my pictures from this morning. And this was, John and I were talking about it. 50-50 from a good bottom. Everything says up, right? And the small triggers are down against me. So I'm waiting for that close above the smalls. In PFI, look at how far away from the window this close is. This close has me in at 82. The top of my window is at 56. I'm already 6 points in the hole from the best of the best spot. And me and my personal trading, I'll just let it go. Like if I can't get the roll right there, it's just not my trade. But then check this out. Sure enough, it pulls down, and then there's my close on the correct side, and that made it super easy to get in and a little less stressful because I didn't have to have that ginormous risk on there. And that's just a NASDAQ thing. But you have to have room to manage as well, right? You got to be able to have room. So great trade, dude. I like it. I like everything about it. But NASDAQ takes a little time to learn. It takes a little time to figure out how to manage it, how to gauge those entries, how to give yourself the best of the best each and every time. Because the rules for entry are the same. Or the rules for the large chart are the same. And then the small chart is what changes the game on the NASDAQ. Termination. There's that momentum. All the way down. Alan, I think you found your groove, my friend. Nice job, man. Alan, you found a trade that registers with you, didn't you? And it all starts with termination conditions. This trade gives me heartburn. I don't take this trade, but I love that you're nailing it. Ron's trades, I can't do them. They're not for me. But, dude, you're killing it. And you're consistent with it. Did you think you'd be nailing it like this, with such accuracy 3 months ago when we were working on management and all that good stuff? I love seeing this, guys. It's a growth process that excites me. And Alan, you are absolutely crushing it, my friend. Daryl, your loser today. 3 for 4. I like that. Took a lower probability trade with one lot and a tight stop. Risk versus reward seemed good, but you got run over. And I think this is that same one, right? It's the 50-50 on multiple areas and divergence prints. Virtually no risk, though. You're like, if it goes beyond the window, I'm out. That's it, isn't it, Alan? Just find the one that makes you feel comfortable. Daryl, I love the shot on this one. You knew that it was lower probability, so you were willing to put 1 on there. And your management's what excites me on this one, outside of the window of opportunity. You're like, I'll take a shot. If it goes, it goes. If it doesn't, that's worth 5 ticks. Take my money. Really well done, Daryl. Oh, you guys are getting so good at this. Let's keep doing it. Let's keep getting good at it. And then Dwight, let's see what you did, my friend. Is this magenta important even though the triggers are strong on both charts? And Dwight, I'm going to stick to my answer from earlier today. I don't have any trades that use magenta dots. I don't have any trades that use those small swing 1-to-1s. But you know what I do have? Is termination conditions come into play on my charts when none of the trigger lines are through a divergence high. For me, that's a pump the brakes moment. And then notice how that small swing 1-to-1 happens right at the divergence high. Awesome. Alan, enjoy your afternoon, man. Do you see how that worked, Dwight? I don't have any rules for these. But do you notice that they show up right at that termination condition? So these don't worry me. The divergence high is going to have me on edge. It's going to have me managing and making sure that everything's perfect over here. Does that make sense, Dwight? And that's kind of what I do. Since I don't have rules for them, a lot of times I see the correlation. And you'll notice that the correlation right here is where it was losing momentum. These small swing pivots were right at that level, right at that 3 divergence level, reminding you that this was a problem spot. And I think they're doing the same thing here, reminding you that this is a potential problem spot. So maybe it's a reminder indicator. I think we just coined something here. When you see these, look to the large chart. and see what they're telling you. And at 44.93, some lows. Yeah. And I'm not going to lie, Dwight, I just made it up. Looking at it, like, that's what stuck out to me. So I would want to go back and take some pictures, right? And see if it really does hold true. Ron, you took a shot with stupid looking triggers. That's how I like charts annotated. But you didn't get married to it. You had some wonky triggers that weren't quite right. Broke your rules, managed out. Break them like an artist. Paul, CL, maybe a breakout coming. Maybe not. That's the S&P. And the divergence, Dwight, is just a loss of momentum. That's all it is. It's a loss of momentum. And Paul says maybe a breakout coming, right? Are they going to break support or are they going to keep trying to go up, guys? Do we know? Paul says he's holding. Paul says, you know what? I'm just going to wait a minute. I don't have a termination condition up top. I'm trading directly into support that's already held to the tick. No shame in letting areas break, guys. You don't have to be first. And then, Paul, I got to be a jerk real quick. Maybe a breakout coming. Maybe not. Maybe it's going to hold in that range for the next 7 hours, right? We just never know. Gary had a big fib there. Took the momentum style trade. Got paid. What's going on here? Is this a different... Gary, why does this chart look nothing like this chart? Do you have two different contracts? Do you have the old contract on one chart and the new contract on the other, maybe? It doesn't matter. It's the same market. What's your contract expiration on your NT8? These won't look that different, right? NinjaTrader 8's never going to look like a long trade when this looks like a momentum short. So you're probably on the October contract here instead of November on crude oil. I would check that, Gary, because that's like 31 flavors of wrong. Everything agrees except that one. And I think you probably didn't roll it, would be my guess. I saw that earlier and I didn't comment. I thought, oh, maybe it's a different market. I didn't look at it as close as I probably should have. So here's crude oil. So let's look. Here, watch this. Let's go to 1023 real quick. Yep. That was it. Well, maybe not. That's 1023. Oh, because it changed all of them. Darn it. And then there's my 1123. They're similar. They're similar. Something's off with it, Gary. Weak triggers. They're all above the area, but the smalls are below the large. We've had a loss of momentum. Guys, I don't have a good top for the momentum trader, right? I don't have a clear path for the trend trader. I don't have a good termination for the HVA trader. All I have is to sit on your butt and do nothing. But they sure did give a pretty opportunity to get up there. What do you guys want to talk about? We got about 15 minutes left. We made it through all your pictures, guys. I'm not just going to talk about the NASDAQ PFI. You have to ask me questions about the NASDAQ. Guys, giving people NASDAQ
Um, you have to know. You have to know. Tony, a lot of crashes today. You know what I do when I crash more than I think I should, Tony? Let's cover that one first because that's a big one. True story. If I'm crashing more than I think I should crash, and it doesn't happen very often, guys. I rarely crash. I'll do this, Tony. I'll clean slate it. Like I had a morning where I couldn't even get NinjaTrader to stay open. And I just deleted all my workspaces and I deleted all my templates. And then I just went to the resource page and re-downloaded. And it literally, guys, is a 6 or 7 minute deal. Tony, if you're comfortable with it. Yeah, like when I'm just like, God, it's so crazy right now. I'll get rid of everything and start fresh. And that's just me. And then D-Rock, let me answer your question. And then Snorri, I'll read yours once I get through D-Rock's. Tony, take care, man. Ron, take care. So D-Rock from the education page. Dun, dun, dun. Here's your first one, and this is an HVA trade, so let me show you a picture. And this is the same stuff Nexgen's been teaching for decades. So D-Rock, price reaches resistance. What we teach in this classroom mostly is number 3 here, when all the triggers are strong, looking for the pullback to get to the next area, right? So when you're comfortable with this one, there's what we call the HVA trade, and it requires an extra chart, which means that you're going to have the attention to look at another chart and not get seduced by stuff that isn't important on it. But when you have a termination condition and the triggers start to roll, there's an opportunity to take these HVA, pink lines at the top for shorts, green lines at the bottoms for longs. And this is really your first higher probability shot. It's not high probability trend trade, but like this is your first shot, and it usually happens real close to the termination conditions. And then from there, it works it into those high probability trend trades. And if you look at it, the rules are right here, and this is kind of cool. Terminations lead the way, the same stuff that you learn in the high probability trend trade. Not trading into termination conditions. Once again, those termination conditions are so important. And then picking the area where the market is likely to continue. And that's the third part. And all of that stuff you learn from the high probability trend trade. And when you piece it together, you get that termination that creates, the market's not going up anymore. It hits it, but you don't want to be the first one in because you typically get run over. So when the triggers roll on your other 2 charts, look for opportunities on an 8 range chart right at the HVA. And I'm so happy to talk about this trade because you see it all the time. First, you have to have a termination. Then your triggers roll, and there's that HVA. And this look coincides with that momentum look that a lot of people are taking. I don't care for the momentum trade, but if there's a high volume area there supporting it, termination, triggers begin to roll. It's right there at those strong small triggers. It's just another opportunity to catch that top before the high probability trend trade. So if you want, read through it a little bit. And when you got your software, do you have that market flow chart? No, not high volume. I wouldn't worry about it yet, but plan on adding it eventually. High volume area just means the area where the volume was the highest, and it comes across as those pink lines and those green lines. And I'll show you guys in a second what it looks like. Snorri, you've seen a lot of people talk about the shutting down of my Forex fund prop company because the court documents that the CFTC is using close that company down are very similar to Apex, take profit from more. I don't know anything about it, Snorri, not at all. I don't know anything about my Forex fund prop. I would be curious. I don't know what an order flow is. I would be curious to know why they got shut down before I started panicking about it. Usually when the CFTC gets involved, it's because of unethical trading practices or they're actually calling trades. And the CFTC will jump on that a lot. So I would find out first what shut them down, like what the charges were, before I worried about it too much. That's just me. Chances are they were doing something that wasn't by the rules. And it's also possible that since it wasn't by the rules, the PFTC said, give us $10 million or we're shutting you down, and they chose not to. That's always a possibility too. So I don't know. I don't have enough information to answer that. Sorry, that wasn't a very good answer, was it? And then Gary, there's that same one that you showed. That's that momentum trade. Momentum out takes you out. Nicely done. And then Paul, looks like it's going to hold. That's why you wait. That's it. Don't trade into terminations, right, Paul? You've learned that enough. So guys, let me go to my ES and D-Rock. Let's talk a little bit further. Yeah, I probably will too, to be honest with you. So let's look at D-Rock, the low at 943. At 943, we had a termination condition on the largest chart. Small triggers roll, come up strong. The termination holds. When the triggers roll, the HVA trade is a potential opportunity to get in here. And PFI, high volume area, just refers to this green line is kind of a line in the sand. Price goes up. When you get a pivot and a breakout, it creates this green line from a high, or this magenta line, or green line from a low, magenta from a high. And it's kind of a line in the sand. It's where the highest concentration for your best chance of success. Yes, D-Rock. Guys, they're useless on their own. And so when you start trying to incorporate these ideas in, you have to make sure that the rules are met. And you'll notice that anytime market flow is ever mentioned in any scenario, in this classroom, anywhere, it always revolves around the rules being met first, making sure that the rules are met on the chart, making sure that you have a termination, making sure that the triggers roll, and then looking for an opportunity. It's not where the momentum took off. You're not listening to me, PFI. Check it out. I know, but I'm going to sound like your wife. You hear me, but you're not listening. So guys, here's your termination condition right here, right? I'm just kidding, PFI. Channeling my wife. This price at resistance, D-Rock, PFI, Paul, Snorri, everybody in this room, this price at resistance has the potential to be a termination. We've got red fibs everywhere, but the market is screaming up with odds favorable momentum. This is where a lot of people say, I think resistance will hold. And it's really just a guess, right? Because the momentum's against it, the trend's against it, everything's against it. I think resistance will hold. And people get in right here. And they're like, I'm going to go short because of a red line. And it goes down a tick or two because price reacts, and then they get stopped out, and then they try it again, and then they get stopped out, and they try it again, and they get stopped out. And guys, this is where people lose an exorbitant amount of money, trying to predict where the market's going to turn, rather than allowing a smaller, faster chart to help them identify. So check it out. This price right here, see how the small get below the large? It's better, but it's not perfect. Here your large roll, here your small roll, and then D-Rock, there's that high volume area when the triggers roll. See how the market pulls back to it? That's your high volume area, guys. That's your best chance. And notice that you're trading with the trend, you're trading with momentum, you're trading from the area. So what happens, PFI, I'll talk about high volume areas. So in order to have a high volume area, here's your reversal bar. And then you get one of these white bars. And this white bar is what we call a breakout bar. It's that second bar after a reversal, right? So here's your pivot. Here's your breakout bar. The black little space, this is your high volume area. This is where the highest concentration of buyers was. That's what creates that green line. This is where the highest concentration of sellers was. That's what creates that magenta line on that breakout bar. So when everything rolls and they give you this line in the sand, they give you this, I triple dog dare you to come back to that area where all of us got together and said we wanted it to go down. When the rules are met, it becomes an outstanding trade. Does that make sense? Guys, this is one that you have to study. This is one that you have to practice the exact same way that you practice your high probability trend trade. And if you try to add this one in and just simplify to saying buy the pullback, right? Buy the pullback after the rules are met, then you have an outstanding trade. But if you buy the pullback before the rules are met, you get your butt kicked. So good. And PFI, I don't use them. I'm not saying, I think they're wonderful. I have one. I will take an HVA trade if the rules are met perfectly. But D-Rock, if you decide that you want to start to study it a little bit, create a checklist for rules. Just go to the rules and create a checklist for your entry, right? And then scroll back and take 10 pictures of your perfect long entries and 10 pictures of your perfect short entries. And guys, this is the part that people skip. If you're chasing momentum trades and I said, hey, Alan, show me 10 pictures of the perfect momentum trade for you, or I'm going to shut off your software. Not that I have the power to do that. Could you do it? If someone said, show me 10 pictures of your perfect high probability trend trade, could you do it? Because, guys, this is what so many people skip, is they think that because they wrote rules, then they're going to be good at it. You've got to go back and you've got to study it. You've got to look at those trades so many times that they become easy, right? And then PFI, absolutely. The NASDAQ's a different animal, and that one can help tremendously. But the rules still have to be met. Let's see, D-Rock. Let's go to the rules and see. Great question. Rule number 3, entry at the areas on the small chart. Pinpointing the entry area involves looking for specific indicators such as Fibonacci lines. Oh, that's a momentum trade. Hold on. Let's go to the high volume area trade. The market flow HVA line that is positioned inside the smaller chart, small and or large triggers. So, yep, absolutely. The rules say that it should be inside of it. So the same way that a high probability trend trade, guys, lines inside the triggers create the advantage, the HVA creates the advantage when it's inside. And what you'll find, D-Rock, very often, is that if the trigger lines are on the wrong side or the HVA line is on the wrong side. So here's our reversal bar. We do have a termination. Everything still says up. If this bar is what we call a breakout bar, D-Rock, it'll print a high volume area. But you see how nothing's rolled? It's just too soon, right? It's too soon to take a short. The momentum is up. The direction is up. Joel, you too, man. Great trading today. Everything says up. So what those triggers rolling does is it lets you know that if it's really a top or it's really a bottom, those triggers have to roll. And if we go back to 943, everything is down. If this is really going to be a bottom, see how the large roll but the synthetics don't? And you get that indecision. And then when everything agrees, I'll be damned. There it goes. So pretty cool, right? Guys, 90% of what you do is reading your charts. 10% is just waiting for the advantages and taking a trade. Great class today. D-Rock, who is your salesperson? Just talk to Jim and ask him about it. You could, I don't know if it's on your, I don't know enough about the sales process to know whether or not it's just there and waiting. What you can do if you want is you can go File, New Chart, PFI, awesome. And then once you go File, New Chart, let's say we're doing crude oil. I'll go crude oil. And then you can just build one. You can change your dynamic Renko to a range and create an 8 range. And you can just really build the chart. I'm going to warn you right now, though, market flow, guys, if you're not comfortable with your rules, market flow it's just a distraction. It really is. If you're not comfortable with your rules, market flow will distract you and mess you up. But I love HVA trades, and I love to teach them. I don't mind. I used to teach them in the 101 class. But get comfortable with your rules first. Get comfortable with terminations and build a little bit of patience. And then, yeah, on NinjaTrader 8, you've got it in your template, so you can build the chart. If you just want to look at it and play with it and ask questions, feel free. HVAs don't happen very often. They don't. But when they set up perfectly, they're effective. They really are. And guys, that's it for me today. Awesome class today. Thank you for being here. I hope you learned something. It's always my goal that you learn something every time, right? Get a little smarter every day. Get a little closer to your goal every day. Remember, keep it simple. Keep it focused. Keep posting those pictures. Keep asking those great questions. And I'll be back tomorrow morning at 9 a.m. and we'll do it again. Every day until we get to where we want to be. Guys, have the best afternoon ever. I'll see you in the morning. Be good.